India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Fresh new week, and we're starting this week on a Tuesday, of course. Yesterday was a market holiday with voting here in Mumbai. And we'll get you everything you need to know as we kick off another week. And of course, not very far away from the first week of June, which is, of course, election results. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. As always, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning. So many queues this morning, right? The voter turnout could have been better in Maharashtra for sure. I mean, it was just somewhere around 54-55%. But overall, the market is not looking too bad. So we have lots of queues today.
Well, and no worries on the global front, right?
Yeah.
You've heard more positive stuff in the last 3-4 sessions rather than negative. So we go to according to our own queues from here and wait for the big political outcome.
Absolutely. And, I think you have... I'll just start with elections, which is, of course, the big one. And for whatever it's worth, I mean, this voter turnout business has been analyzed to no end, to death. But really, there is no way to tell whether it favors a low turnout is good for the incumbent, a high one is good for the opposition. But for what it's worth, the data is up on your screen. This is, of course, according to the Election Commission, which last night said that the turnout in the fifth phase was approximately just over 60%. The number was just under 62% in 2019 for these same seats which went to poll back in 2019. So it's not very different. I mean, this number could rise by the time the final numbers come through. So in any which way, I mean, it's not dramatically lower. Let's just sort of say that's the takeaway, really. So is it really incremental Q based on which the market perhaps will trade? I'm not very sure. Now, Prime Minister Modi, in an interview to a television channel, essentially predicted that, he predicted a post-election rally which could propel markets to new highs. Now, this is coming in from the Prime Minister. Of course, I mean, he's an election candidate himself. And so you got to sort of, take that to that degree with a pinch of salt. But it's interesting, and I think markets will pay attention to this. More than anything else, the confidence that he is exuding as we sort of wrap up this entire election season. It's been a long election season, but I think over the last couple of phases, at least from the body language, what we're hearing in terms of sound bites, etc., it's looking better and better for those who are betting on the fact that, the incumbents will come back in a strong kind of a way. Now, another sort of, not from a local perspective, election perspective, from global perspective, was the rally in metals, right? Really big move in metals like copper, which has broken out to a new high. This, of course, happened yesterday. But even gold is at a new high. Silver saw a large rally. So, the commodities complex saw a pretty large move, and some are kind of linking this, especially the move in copper, to some of the sort of property sector measures which have been announced in China. We'll talk more about this as we go along, but keep an eye out on the metals complex here as well. I mean, Saturday, of course, we had those 2 hours of trading, and Vedanta did very well. We have overnight cues as well. So NASDAQ was up about 0.65% last night. And this is, of course, despite the 10-year, which went up 2 basis points. Dollar index is very steady. 104.5 or so is where that is at. Oil prices stand slightly north of $83.5 per barrel. So this is, the new stuff, the new stuff as we come back this morning. But now to the old stuff and circle all of this back to levels here. So on Friday and on Saturday as well, we basically saw follow-through buying from the prior sessions. And the Nifty is now taken out the last sort of retracement, which is the 61.8% retracement of the fall that we'd seen. And what that basically means, we left off at 22,500 plus. What that basically means is it's a kind of line of sight opens up to the previous all-time high. Now, it happens later. That's, of course, debatable. But the point is, FIs are also starting to come back. So they bought on a Friday worth about 1,617 crores. They were net buyers for the first time in about 11 trading sessions before that. And they buyers for the first time in May as well. The numbers speak for themselves. FIs selling 35,000 crores in May. Locals matching them dollar for dollar, rupee for rupee, and buying about 34,000 crores. So almost equal amount coming in from both FIs and DIIs, netting each other out. Now, Nifty, as I said, has the line of sight clear for a new high, which stands at 22,794. Bank Nifty, it needs to get to the 50% retracement. It's not done that yet, which is 48,479. It's been running a little slower, running behind what the Nifty has already done. And the 61.8 for the Nifty Bank is 48,832. And on the way down, the low for the Nifty Bank, which should not break, is 47,340. GIFT Nifty will come up on your screen. I would say that, the mood has changed. You can see that in the price action Wednesday, Thursday, Friday. And of course, what we saw on Saturday in those 2 hours of trading as well. And it's more up than down. And we're also, as I said, also getting into the sort of period where the market will very intensely focus on trying to position what the election results throw our way. 50 points higher on the GIFT Nifty is the implied open. Sonia.
Absolutely. So it looks like it's going to be a very positive start this morning, right? Building on to the gains that we saw last week. And there are many triggers that will work out in our favor. Of course, one of them is Brent crude, by the way. Brent crude is now below $84 a barrel. It fell overnight. So that's another cue to track this morning. But apart from that, plenty of positives. As we've been telling you, the main theme really is the global cues that have been very, very strong for this market. So the US markets continue to surge. In fact, both on Friday, yesterday, of course, it was a bit of consolidation, but on Friday was really the big move. Nasdaq has hit record highs. All eyes will now be on Nvidia that reports its earnings on Wednesday, and we've seen the kind of spike up in that stock. So, the entire AI, IT sector will definitely be in focus. But the Dow has conquered that 40,000 mark. That happened on Friday, but nevertheless, those milestones have been conquered and held. So that's one space that our market is definitely going to focus on. For, in terms of flows, the FI selling has reduced a lot. It's reduced to just about 90 odd crores. So that's a positive thing. And the Nifty was up about 2% last week. So we will be building on to our gains today. And this pullback can continue as per what the GIFT Nifty is suggesting. The only thing is the voter turnout was on the lower side. And, that generally is not a great thing. Maharashtra and Bihar, very low voter turnout. Maharashtra was 54%, Bihar was 53%, as we know. But let's talk about some stocks that are in focus. I think BEL will definitely be in focus this morning, not just on the back of good numbers. A lot of brokerages, Jefferies has actually gone ahead and raised their target price on BEL to 305, which is the big upside to the current market price. And the company has beat their own order inflow guidance as well. They have received 30,000 crores of orders in FY24. Their guidance earlier was 20,000 crores. So this is one stock that definitely the street is going to focus on. The other one is India Cements. Weak numbers coming in from India Cements, but the entire cement space has been on the back burner a bit. So these are a couple of stocks that I'm looking at this morning. Of course, plenty of other stocks that will be in focus based on brokerages, etc. But my eye is on some of these companies that are manufacturing for the globe.
Yeah.
So for last week, we saw Dixon Technologies, talking about how they're really going big on mobile displays. Then BEL also, if you go through the brokerage reports, you'll notice that exports is now, the contribution of exports is now increasing. And that's the surprise element that a lot of brokerages are talking about. But what are you tracking this morning?
Well, let's start off with how the FI is positioned first up. Now, the FI is a country to remain net short, which, as we have been telling you, is not such a bad thing. 72% of their positions on the short side. In absolute terms, that numbers are still holding at around 2.5 lakh contracts. We need to adjust it. So if you're comparing data over the last year or longer than that, then you need to adjust it. So that 2.5 lakh contracts on the short side effectively looks like 1.25 lakh contracts. But a net short market, you want that. A market that's devoid of shorts in the system doesn't give you a reason to see a bit of a short covering bounce. What about the options data? I'm highlighting two strikes out here. There's various, out of the money call, out of the money put action. But I'm just looking at the nearest possible strikes. The 22,400 put, well, it has more than 40 lakh shares, as well as the 22,500 call, more than 40 lakh shares odd. So just plugging in the premiums out there, the near-term range you're looking at on the Nifty is around 22,325 on the downside. On the upside, it's around 22,650. This is the near-term range as per the options data. On the downside, the two technical levels you want to track is the 20 as well as the 100 DMA. You don't want the 100 DMA to break on the Nifty. And if you pull up the Nifty Bank, you don't want the 100 DMA to break on that one as well. It's at around 47,200 also. That becomes important. For the time being, we're at around the 20 DMA. So you'll want the Nifty Bank to build on from here on. So that's important. It's taken support at 100 DMA, gone past the 50 DMA as well as the 20 DMA. Today, since it's a Tuesday, you'll have the Nifty Financial Services Index that'll play out the weekly expiry. So some kind of volatility in the final 60 minutes or so. Two stocks I'm looking at. One is Vedanta. Everyone's talking about this melt up in metals. You've seen, silver prices hit the highest levels in more than 10 years. The only way to place silver here in India is via Hindustan Zinc. And the float on Hindustan Zinc is very, very limited. We spoke about Vedanta at around 300 rupees. We spoke about Hindustan Zinc as well at around 320, 330 rupees. And this is less than 45 days ago. So in case you want to play this entire base metal rally as well as some part of ferrous they have, well, Vedanta is best placed on that front. And the silver part that you've seen, well, there's only one stock that you can play, which is Hindustan Zinc, and Vedanta is a promoter. So Vedanta is a stock that I'll keep on my radar. The other one I'm looking at is IEX. The stock, if you look at it, it's been taking out crucial levels. Now it's above the 20 DMA, the 50, the 100, as well as the 200 DMA. Between the 140 to 152, there was a bit of a resistance band. It's taken out all of that, and volumes as well were fairly decent. So that's the stock I'm looking at. A rank underperformer, still half from what we saw at its peak. But this one is showing signs that it wants to come back technically as well, looking quite strong, guys.
All right, Nigel, thanks very much for that. So keep an eye out on many of these cues, and metals, as Nigel pointed out, should be in focus as well. Vedanta seeing a big move over the last couple of days. Saturday as well, it stood out. On the rupee, here are some views which are coming in. Abhishek Goenka of India Forex and Asset Management weighs in. He says the rupee strengthened on Friday to end at 83.33 to the dollar after several sessions of extremely range-bound price action. The VIX, he says, has spiked in the run-up to the election outcome, but we have not seen a spike of a similar degree in the USD INR volatility, which indicates markets' confidence in the central bank's ability to manage volatility remains. Overall, he expects the dollar to trade with a slight weak bias against major currencies as US economic data surprises have been more negative off late. For the rupee, the range he sees is 82.6 to 83.8 in the medium term.
Okay, and let's also get you some views on the bond market. Vishal Goenka of IndiaBonds.com says the US yields gave up most their post-CPI gains of last week and are expected to edge wider ahead of the FOMC minutes on Thursday. Markets will remain range-bound for the next couple of weeks due to global bond index inclusion and election results. He expects a 10-year benchmark bond yield to trade in a range of 7.08 to 7.13%.
Well, we've got a lot of stocks that we're tracking for you in our special Top 10 segment. We'll get into further detail in just a bit. For the time being, we run you through the list. Oil India, BEL, SAIL, Biocon, Deepak Nitrite, all of them will be reacting to positive news flow. Add to the list IRFC, Whirlpool, Ujjivan Small Finance Bank, Kalpataru Projects, all of them on the positive side, and ONGC will be reacting to its numbers on the negative side.
Okay, well, Robert Socken is with us. He's global economist at Citi. He's joining in to take some questions. Robert, good to have you with us here. Thank you very much for your time. The market here in India has been very focused on elections, and the outcome is close by for this sort of long-running general election. But globally, what are the most important cues, Robert, to your mind? It's been pretty sanguine overall, right? And risk has been very well behaved. If you look at the US, if you look at rates, dollar, etc.
Yeah, absolutely. And thank you so much, as always, for having me. I think, as you said, there are a couple major risks that we've been monitoring for this year. Election risk has been one of them. So far, this was the big story at the start of the year, the sheer number of people that were going to the polls, the amount of elections we've had. So far, none of these have really rocked the boat in terms of markets or the global outlook. I think we're going to have to wait from an election standpoint as we get closer to November, where the U.S. presidential election is going to loom very large. And I think that is going to lead to a lot of discussion within markets and is going to have very substantial implications on the economic and market policy outlook. Now, in terms of other risks around the globe, right now, as you said, I think the real focus is we've seen much stronger data than we were expecting, at least in Q1. But we've also seen sticky services inflation data. And it really comes down to what is going to happen to the U.S. economy heading into the rest of the year. That was the story in the U.S. to start with Q1. Q2 data have been more mixed. We've seen a little bit of improvement on inflation. We've seen also a little bit of softening in activity, some downside data surprises. And so the real question is, how is that going to suss out throughout the year? Are we going to go into a sharper downturn in the U.S., or are we going to have a soft landing? What does that mean for the Fed? So that is the focus of our monthly outlook this month, and I think that's going to be the key focus for much of this year.
I think the common narrative now is that, there could be a rate cut coming in September from the US at least, purely because of the way inflation is cooling off. A, would you concur with that we're looking at a rate cut in September? And B, what does this mean for risky assets like equities? Because we're here at a time when we're seeing commodities pick up in a big way, whether it's, silver prices at an 11-year high, gold is surging. Of course, silver is also surging because as an industrial metal, it's picking up a lot of pace, given the way EVs are rising globally. But your thoughts on how to approach it if we're heading into a rate cut by the US Fed in September?
Yeah, absolutely. So first, on the rate cut side, I think it really depends on the path forward for the economy. As I mentioned, that there's that pathway to a larger moderation, a larger slowdown in growth, and that could open the door for the Fed to cut rates fairly rapidly. Our U.S. team at Citi expects that to be the case and has them starting to cut rates in July and then continuing with 4 cuts this year and continuing with fairly rapid rate cuts later in 2025. Another path, as you said, which seems to be more the market path, is that you get kind of this moderation in growth, but a still resilient U.S. economy. Inflation's fairly slow to come down. And in that environment, I think you get 1 or 2 rate cuts from the Fed, probably 2, because 1 would seem like, I think, an odd tenor unless it starts at the very end of the year. So I think a very reasonable path could be a rate cut in Q3 and then a rate cut in Q4. Of course, we'll have to see at the next Fed forecasts how they're thinking about the economy, but I think that's the way the markets are pricing it right now. Now, in terms of equity markets, I think there's a lot of different stories going on, as you noted. It's not just about the path of Fed policy, but it's about the resilience of the economy and also the AI cycle, which we've seen power through the U.S. market and probably is more insensitive to what the Fed does in terms of the long-term outlook and the long-term investment numbers that we're seeing out of that sector. So I think there's a lot of complicated factors for equities that are beyond just the Fed's path. But of course, if the economy maintains its resilience and the Fed starts easing up on policy, I think that's broadly positive for the equity market beyond just that AI cycle. I think if you get a soft landing, you could get even higher broad-based numbers in equities.
Hi, Robert. Good morning and good to see you. When the last time we chatted around 45 days or so ago, you were telling us about how you've upped your growth estimates a little bit for China, and some of those data points were looking a little better than expected. How do you see the China piece coming together? I'm reading a note coming in from HSBC earlier today, and they're saying, don't get off this Chinese party too early with regard to the equity markets. Your take with regard to policy action that we are seeing, and how do you approach the Chinese markets?
Point. At the start of this year, we had a forecast for Chinese growth at 4.6%. And then we were surprised by the strength of the economy in the first quarter. As I mentioned, globally, we were pretty much saw upside surprises in almost every major economy, but China was certainly one of the most notable. And we marked up growth to 5% on the year. Now, there have been some shakier data since then. We still think it's a fairly fragile recovery. Parts like the property sector are still soft, while other parts of the economy have been performing better. So it is kind of a dual track or a multi-track economy. But we think there's enough momentum within the economy to achieve something around 5% growth this year, and probably a decent growth prospect for next year as well. And that would point to some attractiveness, as you said, of these Chinese markets. Now, longer term, I do think China faces an enormous number of issues that it has to address that could weigh on the economy. This has to do with dislocation of labor, still very high youth unemployment, aging demographics, unwind going on in the property sector, chronic tensions with the U.S. that are weighing on activity there. So there's a range of reasons to be concerned about the longer term. But I think for this year and probably next year, maybe a few years, there's enough momentum that China can still record a fairly sizable, robust growth.
All right, Robert, we'll leave it there. Great conversation as always. Thank you very much for joining us. and appreciate your views here on CNBC TV18 as always. Well, I think we'll take a quick commercial break here. Our list of top stocks to watch out for lined up next with our research team. There is a lot to track, so we'll get on with it in just a bit. Take that break. We'll see you on the other side.
Welcome back to Bazaar Morning Call. Well, we have lots of stocks in focus this morning, so let's get straight to it. Looks like it's going to be a good start to trade, by the way. Our research team is here to help us with a list of top 10 stocks. Sonal is joining in first up to give us a quick review on two companies, ONGC and Oil India, that came out with their numbers. Sonal, good morning.
Good morning, Sonia. Well, let me start with ONGC. Revenue growth was decent. It was up 11% on a quarter-on-quarter basis, but EBITDA declined by 2%. Margins came in lower. This is after considering the exploratory cost as well. So that came in at 44.5%. Profits were flat at 9,869 crore rupees. They were also aided by lower depreciation and higher other income. Crude realizations came in lower quarter-on-quarter. Total gas production was lower on a quarter-on-quarter basis. But the good news is this time around, total oil production has increased for the company on a quarter-on-quarter basis. For Oil India, it was a good set actually. Their revenues were up 4%, EBITDA was up 11% on a sequential basis, margins came in at 42% versus 39%, and profits were up 28% as well. And the additional sweetener here is they have announced a bonus in the ratio of 1:2, so that is something that the street would like as well, going with green on Oil India this time around.
Okay, thanks a lot for that, Sonal. Well, let's hop across to Vivek. He's joining to tell us about BEL. Morning, Vivek.
Well, good morning. Very, very healthy set of numbers from BEL to end FY24. Q4, when you're talking about all three metrics, revenue, EBITDA, as well as profitability, well above what the consensus estimates was. And on the back of that, there have been upgrades that have come in as far as EPS estimates are concerned. Now, talking about the numbers themselves for Q4 gone by, revenues higher by 32% on a year-on-year basis, EBITDA higher by 25%, margins to very strong 28.3% versus 26.7% on a year-on-year basis. On the back of that, profitability higher by 31%. Now, what is the good part about the results? FY24 order inflow has come in at close to 35,000 crore. Remember, the company's own estimate or the guidance that the company had given was just around 20,000 crore. Along with that, when you're talking about the order book where the company currently stands at, it stands at a little over 75,930 crore. So it's a very strong set of numbers, very good order inflow, as well as a strong order book that BEL currently sits at.
Okay, all right. Thanks a lot for that, Vivek. Well, let's focus on SAIL. Going by this entire environment, even if the numbers were a miss, you'll have to say that the stock could move into the green. But these numbers, you need to look at the adjustments, and they're actually a little bit better than what the street was working with. So we're going with green on this one. On the volumes, well, they were on expected lines, coming at around 4.6 million tons odd. The revenues, well, there was a bit of a degrowth because prices are weak. But you need to look at EBITDA on two fronts. One is the absolute EBITDA number, which came in at around 3,500 crores approximately. But then you need to adjust because there was a railway price revision that came into play. And because of that, the adjusted EBITDA number is close to around 1,950 crores, which is still better than what the street was working with. The range was very, very wide from 500 crores to around 1,500 crores. So the numbers are still better. There was an exceptional hit as well in this quarter because of the government taxes under a couple of schemes out there. So that's why the net profit number got distorted. But otherwise, the operational performance was good. You have steel prices as well that have moved up and coking coal costs that have cooled off. So the margin expansion will pick up from here on. The only problem is the debt number has moved up to more than 30,000 crores as well. And being a PSU, it has very ambitious expansion plans. So the debt number is a bit of a worry. But going by the numbers, you'll have to say the stock opens up in the green. Sentiment as well is fairly good out there.
Okay, thanks a lot for that. Well, let's go across to Ekta now. She's going to tell us why you need to look at Biocon this morning. Ekta, over to you.
Thanks for that. Well, yes, there was a US FDA press release last night where they indicated that Biocon's biosimilar Aflibercept has received interchangeable status from the US FDA. Now, the US FDA approved two of them, which is basically Biocon's drug, Yesafili, as well as another one with interchangeability status. Now, what does that mean? Is that basically when you go to a pharmacy, if you don't have a prescription for a certain biosimilar, you cannot access that biosimilar. But now, if you go with a prescription for, say, the reference product or the branded biosimilar, you can still get Biocon's drug now without a specific prescription for it. So that is basically the big kicker which Biocon would receive once they launch this particular drug in the US markets. Now, aflibercept is used for eye conditions such as macular degeneration, macular edema, diabetic retinopathy, and it marks their entry into the ophthalmology space, in the biosimilar space in the US. Now, Biocon has not yet launched this drug. The patent for this particular drug or biosimilar expires in 2027, and the market size is significant. It's at $5 billion. It just shows Biocon's prowess in terms of getting approvals with interchangeability status. They've received insulin glargine in the past, and now with aflibercept, it's another feather in their cap. So while they haven't launched the drug, it just shows their ability and their prowess in the biosimilar market. Expect the stock to be in the green.
All right. Ekta, thanks very much for that. So keep an eye out on Biocon as we start this morning. Deepak Nitride is the next one we'll focus on with numbers. Sonal has got details. Sonal, morning.
Good morning, Prashant. Well, the consolidated numbers, if we look at them, the margins have declined on a YOY basis, but quarter on quarter, it's a good recovery that the company has seen. Overall, revenues are up 8.5%. The EBITDA is down 13%. Margins are lower by 300 basis points, but profits are up 8.5%. But if we look at the internals, there is a recovery both on a YOY and on a quarter-on-quarter basis in both their segments, be it advanced intermediaries, where the EBIT has come in at 134 crore rupees, and especially phenolics, where their EBIT has increased by 16% on a YOY basis. There's a recovery on a quarter-on-quarter basis as well, and that's the reason I'm going with green. The recovery in one of their major segments, which is phenolics, which has been under pressure in the last couple of quarters, and more commentary is something that we'll get on the conference call.
Okay, thanks a lot for that. So we'll keep an eye out on Deepak Nitride, but let's also talk about IRFC. Abhishek is here to tell us why you need to watch that one this morning. Abhishek, over to you.
Well, Sonia, strong P&L coming in from IRFC. The NI is up 34.5% YOY and more than 7% sequentially. The OPEX is down about 28.7% YOY and 2.3% quarter on quarter. That has helped the operating profit growth of 33.5% YOY and about 7.5% sequentially. Provisions have declined by 19% YOY and more than 1% sequentially. So the PAT is up 33.5% YOY and close to 7.5% sequentially. Back to you.
Okay, Abhishek, thanks a lot for that. But tell us about Ujjivan Small Finance Bank as well.
There is slight hiccup in the asset quality, but no worries given the fact that this merger has proved to be beneficiary for them with respect to cost of funds. So gross NPA in absolute value has increased by 7.3% quarter on quarter. Gross NPA ratio has increased by just 5 basis points sequentially. The net interest margin is at a 6-quarter high of 9.4%. This may not be sustainable, but in Q4, they had a one-time cost benefit with respect to merger of about 17 basis points on the cost of funds. Overall cost of funds have declined 25 basis points sequentially. The RWA to advances, that ratio is at a 15-quarter high of 76.7%. They have given FY25 guidance, so they expect to maintain a loan growth of 25%, which is on the stronger side. Credit cost will normalize to about 1.4 to 1.5%. It was at 0.7% for FY24. A net interest margin will remain around 9%. It was at 9.1% in FY24. And ROE, they are targeting of about 22%. It is at 26.1% in FY24. PNL, with reference to NI and PAT, it's a beat on our poll. Back to you.
All right, some guidance being put out as well, as Abhishek points out. Abhishek, thanks very much for that. In fact, you'll hear from the management, which will be with us at 8:35 this morning. So in about 5 or 6 minutes, you'll hear from the Ujjivan Small Finance Bank management. Now let's move on to Whirlpool, which reported earnings as well. Vamakshi is here with details. Vamakshi, morning.
Well, good morning, Prashant. Well, a good set of numbers is what Whirlpool has reported this time around. Revenue has seen an uptick of almost 4% on a year-on-year basis, coming in at 1,734 odd crores. Now, this improvement in the revenue has come in despite the market for refrigerators and washers remaining quite flattish. The company has gained significant market share in the past quarter, and as a result, they've posted modest revenue growth of nearly 4% year-on-year. The operational performance for the company has also seen an improvement, with improvement coming in margins as well, up nearly 200 basis points YOY. Margins now stand at 8.3%, and this improvement is largely being aided by volume growth, strong cost productivity actions, as well as improved a mix of premium as well as the high margin portfolio. Apart from that, when we look at the net profit, that has come in at almost 79 crores, which is an uptick of almost 25% YOY. Moreover, when we look at the cash flow generation of the company, CFO has actually surged by almost 2.8 times YOY to 535 crores, and this has largely been supported by a reduction in the working capital. Even the free cash flow has managed to stand at almost 470 crores as compared to 16.7 crores in FY23. So overall, a good set coming in from Whirlpool. Expect the stock to open higher today.
Okay, thanks a lot for that. Well, Vivek is joining in to talk about Kalpataru projects and why you should be watching that one. Vivek, over to you.
Well, good morning. This has been long awaited. So what essentially was missing in the puzzle was the fact that the company had not yet declared the total quantum of the order or the size of the order that the company had gone ahead and received the LOI from Saudi Arabia's Aramco. So now, the company has given the complete update to the exchanges. Now the company has gone ahead and signed 3 contracts for 3 packages for the 3rd expansion phase of the master gas system network in Saudi Arabia. Total contract value is close to 7,550 crores. This is significant for Kalpataru. Now, along with that, one thing to remember, on March 5th, the company had already updated the exchanges saying that they had received the LOI for this particular project. So, order book at the end of FY24 stood at over 58,400 crores. This is a significant order. Details of it was what was pending, but the street was largely anticipating this particular deal to come through.
Okay, thanks a lot for that. Here's a quick recap of our top stocks. Stocks with positive news flow: Oil India, BEL, SAIL, Biocon, Deepak Nitrite, IRFC, Whirlpool, Ujjivan Small Finance Bank and Kalpataru projects, while the only stock with negative news flow today is ONGC. But there's so much happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, gold has been surging. Silver is now at an 11-year high, and there's plenty happening in the world of commodities.
Oh, well, absolutely, Sonia. I mean, when you look at the gold and silver prices, we're trading at an all-time high in the Indian markets right now. For the gold prices, it's an all-time high for the global markets as well at $24.40 an ounce in the Asian markets right now. So we seem to have been building up on what the kind of gains that we saw on Friday. This is mostly about safe haven buying. One, you have less than anticipated US data coming in, and that has led to the dollar index sliding a bit. And then apart from that, with the kind of statements coming in sense of Israel, the Iran helicopter crash, and then the the King Salman in Saudi Arabia, his health is uncertain as well. So the overall Middle East really seems to be caught in with uncertainty, and that has been supportive for gold and silver both. For silver, it also is about the industrial demand, which is expected to hit a record high for a 4th straight year in 2024, also supporting prices.
Okay, all right. Thanks a lot for that, Manisha. Well, for the time being, we'll slip into a short break. You come back, we'll discuss a lot of stocks. Abneesh Agarwal of Prabhudas Lilladher will be joining in for some stock talk. Welcome back. You're tuned in to Bazaar Morning Call. Well, we have listed all the top stocks you need to track, so let's get into some fundamental analysis. Abneesh Agarwal, the head of research at Prabhudas Lilladher, joins us on the show. Hi, Abneesh. Thanks a lot for joining in. Well, metals, they are grabbing attention across the globe, and global prices have moved up as well. So some of these stocks here in India will do well. The only problem is some of them have rallied big time. What's your preference in the metal space? Vedanta at around 450, who would have thought? You have JSW Steel that actually reacted negatively to its set of numbers, while SAIL as well has come out with a set of numbers which appear a little bit better. Your preference in the metal space, Abneesh?
You see, as we discussed earlier, morning Nigel, the main thing is that the metals have been moving up because of the global cues. The global cues have been favoring the, you can say, increased demand, and so the prices of all the base metals are moving up, whether it is, you can say, gold, copper, silver, and you just take the name. Now, as far as your stock performance is concerned, copper supplies are tight, the prices are moving up, and so are the you can say, the stocks which is reflected in, you can say, Vedanta moving up. Now, our positioning in case of, say, your metal stocks is, first of all, Hindalco is a very secular kind of a growth story over there. And the aluminium prices have also been firm. So Hindalco, I think, is one stock. And when it comes to your ferrous space, in the ferrous space, as you said, for example, your JSW is there, SAIL is there, but JSPL and Jindal Stainless are the two stocks which we prefer. And I do agree that many of these stocks have run up quite sharply. But I think going forward also, if the metal prices, they continue to remain strong globally, then we could see more leg up in the prices of all the, you can say, metal stocks.
Amnish, hi, good morning. I wanted your thoughts on BEL because the stock, the company reported very strong numbers. They beat their own order inflow guidance, but the stock has also run up a lot. So for someone who's maybe missed out on this rally, do you think there's more to go?
You see, BL numbers have been good. Order book growth has also been great. Now, in terms of, say, stock price or valuation, it is already trading at close to, say, 40 times on FY26, our estimates. Although there might be, you can say, some tinkering in our estimates as we go forward. The advantage of BEL is that, unlike some of the other defense companies, it caters to the requirements of all the segments, whether it is, you can say, Navy, Army or Air Force, and so it's a much more broader play. Now, the way some of the other defense stocks are moving up, I think BEL should not come off. There doesn't seem to be a big downside which is happening in this stock because the company has been listed from the last 20-25 years on the exchanges. There's a particular track record which is associated with this stock. But having said that, I think the incremental returns might come at a slightly, I would say, moderate pace than what we have seen in the last 2-3 months.
All right, so that is on, but let's do one thing. Amnish, if you have any thoughts on Ujjivan Small Finance Bank, we'd love to hear that. But we also have the management joining us now. So I'm just going to get a quick word in from them and then I'll come back to you. Remember, the merger is what really aided the strong top line for them. But the net interest margins also at a 6-quarter high. So mostly things are looking good. But the asset quality has deteriorated. So that is a bit of a concern. Itira Davis, the MD and CEO at Ujjivan Small Finance Bank, is joining us now to talk more about the way forward. Mr. Davis, thanks a lot for joining in. Always great speaking to you. If you can first start by talking about some of the pain points, right? Which one of them is asset quality. Just wanted to understand from you what led to a little bit of a deterioration here in the asset quality. And in terms of gross NPAs, what are we looking at? Right now, you're sitting at somewhere around 2.2%. On a quarter-on-quarter basis, there's been a little bit of a rise. Going forward in FY25, where do you think you can end the year with gross NPAs?
Good morning, Sonia. It's good to be with CNBC, and a very good question. I think, this is the question that, after 2.5 years of continued growth post-COVID, the industry is now looking at an interesting point in time. So I think we are part of that industry, and we are coming from a very unusual place. We have been an outlier on the GNPA and the other numbers. We've had huge provisions in the earlier part of in 21-22, and part of that has been written back over the last couple of years. So in relation to where we were previously, yes, there's been a slight deterioration. But if you look at where we stand vis-a-vis the industry, we have one of the best numbers in the GNPA in the small finance bank, and which is why when recently the RBI announced the conditions for Universal Bank, we are one of 2 banks which qualified for that. And I think the GNPA figures, the NNPA figures, all need to be understood in that context, in the overall context of the industry, as well as, separately for ourselves. Yes, between our last year and this year, slight deterioration, but in relation to the whole industry, we are doing very well, and that's where we stand today. So nothing to worry about there. It's just some changes in the industry which are taking place and which we are addressing.
So can you tell us what are those changes? I mean, how do you see the industry evolving in terms of asset quality? And for your own business, where do you think you can end the year? If you can give me one number on what is the ballpark gross NPAs that you're looking to close the year with?
Yeah, the current situation is that there's been 2 years of or 2.5 years of good growth, and obviously at some point there needs to be consolidation, and I think that is perhaps happening in this quarter. And as the results during this quarter come out of all the industry, we'll begin to see whether that is the case or not. But nothing extraordinary. It's just a consolidation phase, and I think in some places there's been overlending, which is now coming out, and that has to be addressed by the industry. And in some other places, given the current situation, there's been some, changes in the way people look at the repayments. So I think it's in pockets in different parts of the country, but nothing that cannot be managed by the industry. And in terms of the other question you had, in terms of where we are going to be in terms of GNPA, I think we will look towards ending the year around the current levels, if not slightly lower.
No, got that. And Mr. Davis, hi, good morning. Prashant here.
Hi, Prashant.
So credit cost guidance also has been is now between 1.4 to 1.5%, was 0.7% in FY24. So there is a bit of normalization across, right? I think as you've been sort of guiding us earlier as well. This is in line with what you thought as you sort of when you began the year?
Yeah, I think the range is within that 1.4, 1.5. But as the first half of the year plays out, we'll be able to come back with a firmer number, because the first half of the year is very important in terms of the industry, because the second half normally tends to be very good, and what happens in the first half drives numbers such as the GNPA and NNPA. So closer to the September is when we get a better fix on those numbers.
All right. Hi, Mr. Davis.
But for now, we'll go with 1.4, 1.5.
Okay, all right. Good morning, Mr. Davis, and thanks a lot for joining in. Well, your ROE target for the coming year, you're fixed at around 22%. In the past year, you delivered a number that was a little bit higher. Explain that to us.
Yeah, I think, some of the costs that we were benefiting from have caught up, because, some of the expansion that we did by way of new branches and other things, and also some of the benefits which we received by cost reduction during COVID have all been completed, and now we are on new leasing arrangements and additional premises and things like that. And also the staff costs have gone up quite a bit, because there's severe competition in the industry. Several of the players have entered and grown into the microfinance space. So all of those has resulted in some amount of competition in terms of costs in the market, and that obviously has to be factored in. We were on the higher end in terms of ROE. We are now falling within the range of the small finance banks. So even having said that, at 22%, it's a good number to have, and definitely something that is in line with the top players in the small finance bank space.
This MSME segment, the MSC segment, the loan growth has been pretty weak, not just for you, but for the entire sector. What is the outlook, and when do you expect to see recovery?
Yeah, we are hoping that the recovery will come in the second quarter, I would say. Things have slowed down a little bit. It will pick up in the second quarter, and I think if that happens, then the growth will continue in that segment. So let's wait and see how the second quarter looks like on the MSME. The last 2 years, as I said in the beginning, and I continue to say, were very, very good years for the industry. The growth numbers have been fantastic across all types of banks, be it nationalized, private, or even the small finance banks. But to sustain that sort of growth continuously is a very, very difficult situation.
We'll leave it there, Mr. Davis. Appreciate you joining in and coming on here on CNBC TV18 as always, and look forward to our future chats as well. Good luck, sir, to you, to your team.
Thank you very much.
And look forward. Well, that's Ujjivan Small Finance Bank with quick thoughts on the numbers and the outlook. Amnish is still with us. Amnish, hi, good morning. Morning, Prashant here. Just another pocket which saw pretty good action on Friday was, the Dixon, the Amber, Canes. Canes especially, the guidance was solid. I think they said 60% growth in 25 and about 100 basis point margin improvement. What do you like out of that pack?
This entire EMS space, Prashant, is doing very well. And as the entire, you can see, ecosystem around the entire consumer electronics builds up, the things are likely to be better. And Keynes in particular, which is also eyeing the semiconductor space, looks very well. I think in this entire space, I think one company which has done really well over the years, I think your Dixon has done well. Amber, these are the two, I would say, seasoned player, and then Keynes has come. So I think it's a pack of five, six stocks which is there. All of them have done well. All of them have seen very sharp P multiple expansion in the last 12 to 18 months. So I think from here on, the companies which are able to scale up, like I think Dixon looks good, Amber looks good, and even Keynes continues to look good.
Okay, all right. I mean, there's growth, there's top line potential, and bottom line, of course, it varies from company to company. Well, Anuj is now joining in with what he's making of the market and the setup this morning. Anuj, good morning.
Morning, Prashant. For the next few days, my sense is that you're better off perhaps ignoring Nifty and the Bank Nifty and focusing on individual stocks and sectors. Few sectors that you could focus on. I think metals would be right on top, because I think that's one area where clearly there's a big super cycle on, and that's visible in the kind of underlying prices that you have. So that's a space to focus on. Gold finance could be the other one to focus on, given the kind of steep run that we have seen in gold prices. That helps the collateral value of these companies go up, of course. And one more sector to focus on was IT. Because of the inflation data in the US, the way the Nasdaq has been leading the US market, and this week you have Nvidia's numbers as well. So I think that's something to focus on. And telecom could be another sector where you have seen some positive noises. So I think you're better off focusing on individual stocks and sectors till June 4, because the big move on Nifty may have already happened over the last few days. On the Nifty, though, of course, in terms of numbers to watch out for, the first resistance is 22,626 based on the options, and then the all-time high of 22,795 could be the big resistance. Support comes in at 22,380, which is based on options, and then the 20 and 50-day exponential moving average at 22,250 to about 22,330. The Bank Nifty, of course, has been extremely untradeable over the last few days. Only intraday trades are working. And no level-based trading will work on Bank Nifty. I guess still you have this kind of volatility. You could focus on PSU banks today, though, given what the Prime Minister had tweeted. I think that is something that you could focus on. As always, I'll leave you with the quote of the day. And this one is interesting from Jimmy Dean, that if I can't change the direction of the wind, I can adjust my sails to reach my destination.
Okay, wonderful quote as always. Thanks a lot, Anuj, for that. And Anuj saying better to keep your eye on stocks and sectors rather than on the market, which could be all over the place, given that we have a big event upon us on the 4th of June, which is the counting day. But let's do one thing. Let's take a quick break. On the other side, Kush Bora, Sudarshan Sukhani will be joining in for some technical trades. Stay tuned.
Welcome back. There's 12 minutes to go for the pre-open session, and let's run you through the technical trades that you can take. If it's going to be about stocks, what should you do? Kush Bora and Sudarshan Sukhani are with us with exactly that sort of answer. Gentlemen, good morning. Great to have both of you here. Sudarshan, let's just start with you. I mean, last couple of days have been, the moods seem to have turned a little bit from, lots of volatility intraday, which has not gone away. It's become a little more steadier. Thursday, Friday, and of course, those 2 hours on Saturday as well. What's the setup as we start a new week?
Yeah, good morning. See, the Nifty had a V-shaped rally, and that rally sustained. Since then, I've been suggesting that we have to be on the long side of the market, and that applies to the Nifty and the Bank Nifty both. Now, intraday volatility is likely to persist. First, that's the nature of markets. They always never copy themselves. They have different methods and a lot of variety every time we see a new move. The second is that till the elections, this volatility is not going to subside. So assuming that volatility will continue, the trade still is look at those sharp intraday dips and go long in the Nifty. We are just in the middle, probably in the middle of an up move, and there's more upside so far. So keep it simple, buy every dip.
Okay, keep it simple and buy every dip. Got that. Kush Bora is also with us. Kush, very interesting time, right? I mean, last week the Nifty was up 2%. We've pulled back and now we're heading into a big event. Of course, all this election news flow as well. If you cut through all the noise, do you think this market is heading upwards in the medium term? And if yes, what's the best way to approach it today?
Hi, Sonia. First up, a very good morning and a very interesting question. That's exactly how we have to look at it, right? I mean, just cut through the noise and see how the levels and how the fundamentals perhaps are, shaping up. I agree to the fact that, this is a buy on dips market. In fact, on Saturday, Nigel and I were having this conversation that perhaps the Saturday short session is a trailer towards what's going to happen, in the next couple of weeks. And, that's the way up. My concern is that, once we hit 22,700, 22,800 close to all-time highs, then where do we go from there, even if you get a big election, post-election rally? So, while we are saying buy on dips, we are also saying keep booking profits along the way. And there could be near-term resistances that the market could look at least up until elections. 22,700, 22,800 will turn out to be a resistance zone. And beyond that, I think the risk-reward ratio will not be a very favorable one if we get a big jump up. So be a little cautious. As the texture is for now, continue buy on dip. And we do keep seeing, these bouts of volatility. So keep taking money off the table.
Got that. Kush, what would your specific stock trades be?
A couple of them, both of them on the buy side and both from the cash segment. Triveni Turbine is doing very well. Has seen a breakout, is sustaining above the key resistance zones. So from a near-term perspective, 655, 675 are the targets to look at. 625 is where I would place my stop loss. Engineers India is another stock, has had a fabulous last 5-7 sessions. Higher high formations on the daily charts. 280, 290 levels to look at. 260 is where one could place my stop, place the stop loss.
What about you?
Are you asking me?
Yes.
Okay. Ambuja Cement is a buy with a stop under 581. Coforge, now that it does appear that the IT stocks may start beginning an up move, it's a buy on dip strategy. Buy with a stop under 4,400. GAIL is a buying opportunity. It's just breaking out of a trading range. Buy with a stop under 186. And my fourth is also a buy, Container Corporation, which is a buying opportunity with a stop under 980.
Okay, all right. We'll leave it there. Sudarshan and Kush, appreciate you coming on and answering some of those questions. We'll have you back for those 9-10 calls shortly. Amnish, Sobha reported numbers, and by the way, we'll be speaking with the management of Sobha as well a little later on the program. But these stocks, I mean, Sobha is, I was just looking, is up some 70-80% this year. Brigade, of course, has been the other strong mover. On Friday as well, both went up sharply. Any thoughts?
There is no specific thoughts on these two stocks, but in general, I think they're just moving with the tide. If you look at the entire real estate space, as we talked about earlier also, I think that there's a lot of momentum. The pre-sales of all the leading companies are up, and I think the way the demand is panning out, I think all the real estate companies should do well over the next few years. But it has been a long, you can say, a bad cycle from which they have come out, and it is only just a couple of years of good cycle. And usually real estate cycles last for at least 5 to 6 years. So I think that there could be a lot of steam still left. As far as your performance is concerned, stock prices, I think they can be sometimes, you can say, behind the curve or sometimes ahead of the curve. Very difficult to comment, but yes, real estate cycle is strong and the companies should continue to do well.
Okay. I wanted your thoughts also on a stock like M&M, because, the stock has had a dream run, right? Management commentary was very strong. They have many new launches in the SUV space, and the stock has been at a record high as well. Do you see further up moves in some of these themes like autos, and within that, market leaders like M&M?
I think M&M, what we have seen in the last 12 months, I think next 12 months it could be even better than that. And it is one of our top picks currently. And our thesis is that M&M gets, you can say, a lot of profitability from the tractor segment. And last year was driven by strong volumes in the SUV segment, which traditionally is a lower margin segment for the company. Now with the success of CXO, the capacity expansion which they are planning in the SUV segment, and the strong growth momentum, there's a scope for the margins to further improve in that segment. The second one is that tractors last year, the industry actually had seen a decline in volumes. Now this year, as the monsoons are likely to be normal, And if the volume trajectory is positive in tractors, I think their growth in profitability should be better in the current year. So I won't be surprised that M&M from here also gives a strong outperformance relative to the market.
All right, Amnish, thanks a lot for joining in. Wishing you a good day ahead and look forward to chatting with you rather soon. For the time being, we'll take a short break. We'll come back. We'll get you the pre-open rates. We'll also get chatting with the management of Ask Automotive to discuss their past quarter numbers and how's things shaping up going ahead. Stay with us.
All right, welcome back. We are heading towards a strong opening this morning, actually 60 points higher. But let's get straight to some F&O action now. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, hi, good morning. Looks like the uptrend is back. But do you think that there could still be a little volatility in the market? And if yes, what's the best way to approach it?
Good morning, Sonia. Thanks for having me. So we have seen decent recovery in last 5-6 trading session in the index. Nifty has been making higher highs and supports are gradually shifting higher. We have almost recovered from 21,800 to 22,500 zone, and we are just 300 points away from the lifetime high. So major trend is intact and every small decline is being bought. We have seen surge in the put call ratio, which indicates that put writing is also visible, which is forming the higher base. But only concern is that India VIX is at 20 level. However, VIX is at high levels because we are heading towards the last phases of the elections and then outcome will be awaited. So because of that, volatile move could be there, but base of the market is shifting higher. We believe that major support for the index is 22,222. Until it holds about the same, market has potential to hit the new high and head towards 23,000 zone. For intraday point of view, one can also look at the support at 22,400 zone for buy on decline stance. Now looking at the Bank Nifty index, however, the Bank Nifty slightly underperformed, but witnessed some recovery. Major support is near 47,777. And today, if manages to hold above his 50-day EMA, then here also we may see some short covering towards 48,500 to 48,888 levels. Now, looking at the stock specific, we have noticed that selective sectors and stocks are doing well in the market, especially in last 2-3 weeks. We have positive on the defense, railway, capital goods, selective infra name, and we believe that these sectors are likely to outperform the broader market. So first there is buy on BL. As mentioned that we have positive on the entire defense name, whether we talk about BL, HAL or non-F&O name including BDL, MTAR, Tech, Paras Defense. Here we are recommending to buy on BL. The stock has given a consolidation breakout couple of days when now making higher tops, higher bottom on the daily and the weekly scale. Major trend is positive. It has seen the built up of long position, which could drive the fresh leg of rally. So one can buy with support of 252 and we have target towards 270 level in BL. Second trading idea, there is buy on Oro Pharma. Stock has completed a rounding formation at the top. We have seen fresh breakout. Momentum is clearly visible, led by support from the mechanical indicator. So one can buy with support of 1180 and Oro Pharma can head towards 1260 level. Last trading idea, there is buy on BHEL. We have positive on the most of the capital goods name, including ABB, Siemens, Cummins. But now the fresh breakout is visible in BHEL, led by put writing activity. We have seen decent recovery after the corrective move of the last week. So momentum could be seen here. One can buy with support of 203 and one can buy with support of 2% at lower zone and expecting 4 to 5% rally towards 325 in the BHEL.
Okay, all right. Thanks a lot, Chandan, for joining in and giving us those calls on the index as well as on individual stocks. But for the time being, let's talk about the RBI project finance rules now. Banking sources tell CNBC-TV18 that banks see the 5% general provision for project finance as too high. Ritu Singh joins us to fill us in with more details on that. Ritu?
Well, a lot has been said and made of the proposed project financing rules which RBI issued for feedback earlier this month, some worrying about the hit on balance sheets, others terming it a deal breaker for project financing because of the steeply higher provisions. So we've been speaking to a whole host of large banks, including public sector banks that have a more substantial exposure to these infrastructure projects, to understand the kind of feedback that they're going to provide to the RBI before that 15th of June deadline. And clearly, there is widespread discomfort among large banks on that 5% general provision which is proposed at the construction phase of the project itself. The large banks we spoke to believe Even if provisions are to be raised from the current 0.4% levels, perhaps a smaller hike of 1 or 2% could be considered. Other banks believe that maybe instead raising risk weights for project financing during the construction stage could serve the better purpose if the concern is to price the risk better. The second major change which banks are likely to propose is that RBI allow for a minimum 1 year of moratorium period after the DCCO or the commencement date of a project in the case of non-infrastructure projects, and 2 years moratorium for infrastructure projects instead of the 6-month cap which has been proposed. Besides these, banks are also going to seek clarity on whether RBI is going to propose a floor for the exposure above which these rules would apply, say a minimum of 1,500 crores or so. Now, besides this, we understand NBFCs are also in the process of firming and submitting their views to the RBI separately.
Okay, thanks a lot for that. But let's move on now. We have ASK Automotive on our radar now. The company reported a very strong performance in Q4 with almost a 40% surge in revenues. Margins have expanded and their EV business has surged quite a bit. It's still just 4% of their overall business, but EV revenues have gone up 133% in FY24. Kuldeep Singh Rathi, the Chairman and Managing Director at ASK Automotive, is now joining in. Mr. Rathi, good morning and happy to have you here on the channel this morning. Thank you for taking the time out. In FY24, in the year gone by, your revenue growth was very strong at 17%. You're sitting on a base of around 3,000 crores. What is the outlook for FY25, sir?
Good morning and thank you so much. FY25, very good growth is expected. As you know, we are predominantly in the two-wheeler sector, and the two-wheeler sector is bouncing back because of the good demand from the rural sector also. Urban was already good, and we are inching towards our the big peak volumes of 18 and 19, So we expect this year to go very, very strong, and we are expecting a double-digit growth again.
Double-digit growth, you're talking about the top-line growth, I assume. You did about 17% last year. Can you do better than that in FY25?
No, I can't say better than that, but we'll perform very good this year also. We are very optimistic on this year.
Okay. Can you tell me about the EV space? Because over there, growth has been very strong, but of course, it's on a really low base. 4% of your business comes from electric vehicles now. How much do you hope to grow it to over the next 3 to 4 years?
Good part is our business is power agnostic, and we are in 80% of the EV space. So as the EV sector grows, we'll grow accordingly, and more products and coming in because of the lightweighting and thermal management.
All right. Hi, sir. Good morning and good to see you, Ben. So double-digit growth on the top line. What about margins? What are the levers you have in place? You're already in double-digit.
See, our Karoli plant is, which we invested 380 crores in that. Now it is fully operational, and we'll see a very good margin growth this year, at least by 100 basis points.
Okay. So I just want to ask you on the Karoli plant, 380 crores is what you put in. That's your Rajasthan unit.
Yeah.
By when does it break even? Does it break even in a couple of quarters in this year itself? Yes, and at optimal levels, what kind of revenue can you do?
We will become cash positive in the Q1 itself, and we'll become PAT positive in H1,
Oh, that's good. Okay. And what kind of turnover could we see? What is the asset turnover on this 380 crores? And so just one more point. You're looking at putting 200 crores in Bengaluru as well. Yes. What could be the asset turn out there? I think that unit gets commissioned in the Q4. Please go ahead on both these 2 points.
Our asset turnover ratio is normally 1:2. So we'll be doing double the revenue. And this 200 crore additional we are putting up in Bangalore, that will be our third plant in South, and that will be commissioned in the Q4 of this financial year 25. And that will also cater. We are already full with orders from the South customers for the next year for that plant,
All right, Mr. Rathi, hi, good morning.
Good morning.
A lot of the outperformance is expected from the aluminum segment. Correct me if I'm wrong.
Yes.
Underlying metal prices, though, are on the up and up. Prices are rising. How are your how are your arrangements with companies that you supply to? I mean, does it allow for cost escalation? Are these mostly fixed price contracts?
Yes.
Give us a sense.
Yes, we are hedged with all the customers back to back, So we don't suffer any loss now on the aluminium prices front,
No, you mean hedge? You mean you hedge on the commodity market itself?
No, we don't hedge, but it's the arrangement with our customers that they'll pay back to back whatever is the price.
So you're able to pass on any increases?
Certainly.
On a continuous rolling basis?
Yeah, continuous, every month.
Okay. I just had one follow-up to the earlier point you made. You said the margins will go up by 100 basis points in FY25, correct?
Yes. Like this year, our EBITDA margins were 10.4.
Yes.
So we are very confident of doing 11.5, and maybe we'll try to do a little better also.
Okay, so confident of doing 11.5% margins in FY25. Is there any scope to reduce your debt further? I mean, your debt equity is now at about 0.4 times. You've improved that as well.
Yes.
Any scope to reduce it further?
See, we are investing because as we are getting very, very good opportunities in exports as well as the domestic market. So as per the requirement, we are also already very conscious about the debt. And so we'll make a combination of the cash that we are generating and the debt. So minimum debt we'll take because we are investing heavily continuously.
Okay. You're largely present, of course, in the two-wheeler sector, but you've also signed up a JV with the Aisin Group for passenger car products. Can you tell me a little bit about that? What is the kind of revenue opportunity that you see there?
See, this joint venture will open a subsidiary for this that will be opened by H1, after taking all the clearances from the government. So all the revenues from this will come basically in the next financial year.
And how much could that be?
Well, that will depend. In the first year, I think we should do 100 crores or something. I can't say it, to be honest, because let it start first.
Okay, all right. A couple of questions. You briefly mentioned the export opportunity, Mr. Rate. And last year, I think you did around 150 crores, but the growth was more than 50%.
Yes.
And how do you see exports panning out for the coming year? Exports will grow at a similar clip? And as a percentage of your total mix, what does it contribute going ahead?
Last year, we were 3.6% of the revenue, our revenue. So this year we have touched 4.9% of the increased revenue. And we expect that our mission is to take in 5 years to 10% of our revenue.
In 5 years, it moves to 10%. Got it. Final question before we... In 5 years. Got it. Yeah. Working capital days have come down to 17 days from around 28 days. Where does it stabilize at, sir?
No, this will stabilize. That 28 was also outstanding. It was we were outperformed the market, because we are managing it very well. This was one-off because last quarter, because of the OBD2 norms, the productions were very low, so payables were less. So I think it will stabilize somewhere close to 25 or so.
Okay, thanks a lot for that. And all the best for the quarters to come. That is ASK Automotive. Talking about the way forward for their business and good numbers actually coming through for them. By the way, just look at BEL. That really is the stock of the moment. In pre-opening, the stock is up 9% and very good numbers, beaten their order inflow guidance as well. So the street has taken that with both hands. Let's take it across to Sudarshan Sukhani to give us the 9-10 call of the day. Sudarshan, over to you.
Well, consider buying Container Corp with a stop under 980.
Okay. Look at the pre-open. Sudarshan, thanks very much for that. So Concorp is the call from Sudarshan, but the pre-open is indicating a 97-point lower start, a 0.5% cut on the Nifty, 22,400, and a lower start on the sensex as well. So interesting. We'll start lower and then we'll pick up from there. Last few sessions, as we've been pointing out, have been a lot better. But right out of the day, day 2 after this polling, and it's a long election, we've had instances of sort of wild kind of opens as well, and then things start to settle down. So keep an eye out on that. But it's interesting that right at the outset, the GIFT Nifty settled down 100 points at this stage. But commodities, Nigel, big rally there.
Well, that's right. Commodities, they have seen a big surge and it's got a global tailwind to it as well. One of the factors is that the hopes of the Fed rate cuts finally coming about by September. Chinese stimulus is pepping up the market, and also supply side issues for commodities like copper. That's what's pushed up copper prices as well. Now, there's a strong green demand boost as well. That's also supporting prices of copper, of silver as well. And silver, remember, it's at its highest levels we have seen in the last 10 years or so. Silver, as we said earlier as well, it's an industrial metal. There's demand from solar panels, from EVs as well. So that explains why silver as well has come back into play. The stock to track, though, will be Vedanta because it's diversified commodity play. Ferrous, non-ferrous, everything is in a little bit of crude as well. And also precious metals, which is silver. Because Hindustan Zinc is owned by Vedanta. And Hindustan Zinc in the last 45 days has close to have doubled. But the free float on Hindustan Zinc is very limited. So that's why Vedanta could be the play out there. That's about the entire setup. What about SAIL? Well, SAIL's numbers were fairly good. The volumes were in line. The EBITDA number that was reported was around 3,500 crores. And you thought, well, it's a big beat. But need to adjust because there's a railway price hike that was included out there. So X of that, still the adjusted EBITDA numbers around 1,900 crores, which is better than what the street is working with. So no worries on that front. The worry is, though, that the debt has moved up to more than 30,000 crores, which will be a bit of a worry because of the big capex plans. And they've declared dividend of around ₹1 or so, but good going out there. JSW Steel, well, the stock was under pressure for that short session we had on Saturday. Some brokerages are quite positive. JPI believes that, there's a possibility that it could re-rate because of volume growth, raw materials, security, leverage reduction, as well as ROE improvement. So that's about all the stocks in focus, commodities, SAIL, as well as JSW Steel. But IEX, we were telling you earlier that it was showing a bit of a breakout on the technical charts. Vivek joins us to tell us what brokerages are making of it. Vivek.
Well, good morning. Remember, results came last week. We had the management on our channel. We had the management commentary, after which they had the analyst call. And post the analyst call, what we've seen is we've seen a couple of upgrades coming in from brokerages. So the first upgrade has come in from Investec. They've upgraded the stock to a buy from a hold. The target has been raised to 175 from 135 that they had earlier. What they're saying is that, earlier IEX was bogged down by a couple of regulatory headwinds, key amongst them being market coupling. Now, in the analyst meet, the company has said that the market coupling, which is being currently going on, this is a test that has been undertaken, it is a lot slower, and the implementation does appear to be a lot slower than what was earlier anticipated. And on the back of that, Investec also agrees with the management, saying that implementation may be a couple of years away. Now, what they're saying is that they concur with the management's view that this is a 2-year out event rather than an immediate risk. The other brokerage is Access Capital. They've also gone ahead and upgraded IEX to an add from an earlier sell. They're saying that owing to the improved growth outlook for exchanges, they've raised, the FY25 and FY26 EPS by 5% and 6.5%. They also believe that market coupling is a couple of quarters away at least.
All right. And it's also hot, Vivek, right? That's the big fundamental reason, according to me. I mean, oh boy, it is hot and how. And, in some parts of Delhi, it's now 47.5 degrees. In Mumbai, of course, it's humidity and heat and everything. So power volumes should be power demand. And I think I will put out that data. Vivek, thanks for that. We'll put out the data through the course of the day because we get the daily numbers, power demand. I remember about 2 weeks back, we had looked at the numbers and we'd not yet hit the highs that we saw earlier. But we'll do a check this morning as well and tell you what's happening on that front. I think we're just about a couple of seconds away from market open and 15 seconds away to market open. So first trades will come up. A lot of focus, of course, on earnings with names like BEL, etc. in focus. But of course, there is also the other play, which is on commodities with what we saw yesterday, especially on copper, but also on gold, silver, etc. So first rates are on your screen. We start at about 22,460, 450. You got the sensex, which is starting at about 73,870 right now. So it's a little lower, but it's well behaved. 25 lower on the Nifty and about 85 lower on the sensex is what you have. The mid-cap index is down about 0.25%, and the small-cap index is starting about, I think in the round about 0.25% lower as well on that particular index as well. But it's all about specific stocks, and it's been a very, very vibrant market with, of course, a lot of earnings reactions and otherwise as well. Lots of moves. Sonia has got stocks as always. Sonia.
Well, thanks a lot for that. As you rightly pointed out, there's really nothing much happening with the headline index, right? So let's take it to individual stocks now. BEL is really the stock of the moment, 6% higher. Remember, BEL has had a very strong run in the last many days and good numbers coming through. Revenue growth of 32%, EBITDA has risen 25%. And I think what the street really likes is the fact that the company has raised its guidance, it's beaten its order inflow guidance for the full year FY24. So 7% higher now on BEL. SAIL is the other one that I'm looking at. The adjusted EBITDA was better than estimated, but the volumes were down about 3% year on year. So the stock is down about 1% as we speak. City Union Bank is the other one to look at, 2% lower. The operating profit has declined. That's why the stock is under pressure. But the asset quality has improved and the NII is up about 6% year on year. Biocon has also been in focus. It's up almost about 1% right now. There's positive news flow there. Ujjivan Small Finance, the merger has aided the top line, but the asset quality has deteriorated. So I think the street likes the fact that post the merger, the top line growth has been solid, up about 2.5%. Kalpataru Projects has won a contract value of 3 Aramco orders, which is at about 7,550 crores. Huge contract coming in there, and the stock is up almost about 8.5% right now. Data patterns also in focus this morning as the revenues of the company have slipped 2%, but the margins have risen sharply, and that's something that the street likes, 1.5% higher on data patterns. IRFC had a pretty strong P&L. The NII was up about 35%. The stock in general has been a good mover lately and now up almost about 3.5%. And Balkrishna Industries generally tends to get very volatile. In the conference call this time, the company said they didn't choose to give any guidance. They said that the geopolitical environment is a bit tough, so no guidance given. But the stock is surging now. Remember, the numbers for Balkrishna Industries were very good. No problems at all. Strong growth on the top line. Margins have improved. And the management, although not giving any guidance, but overall mood was quite positive on the numbers. So that's Balkrishna Industries, up 7%, big mover there. But overall for the market, very quiet. I think it's not a bad thing, considering we had a good move last week. We're just holding on to the 22,400 mark. Back to you.
All right, Sonia, thanks a lot for that. Well, let's focus on a couple of big movers from the broader markets. IEX, we were telling you earlier today that, in fact, technically things were shaping up well. Vivek as well told us that, a couple of brokerage upgrades out there. So the stock continues to pile on to the gains. 2 sessions, the stock is, up more than 7-8% odd. So big move is what we're seeing on that one on big volumes. Whirlpool, the gross margins expanded by around 400 basis points odd. There was some part of that came down to the EBITDA margins as well. So we did see that the margins came in at 8.3%, which is the highest we have seen in 8 quarters. And that's why some brokerages are a little bit positive. So that one is well up close to 2%. Shankara Building Products, well, that stock as well, you did see the revenues that came up by 14%. The margins as well were holding steady, but in absolute terms, the EBITDA number was up close to 30%. You have a demerger as well that's already been announced a few quarters ago. So the street is coming to terms with that. Vinlas Biotech, the revenues out there were much better. 170 crores, that compares with around 140 crores. And the EBITDA number as well improved to around 13%. So that as well from the broader markets. Ekta sent this review out. It's up close to around 13% as we speak, 10% as we speak. Margins at around 13%. BEL, that's one of the biggest volume movers. So quite a few stocks in the broader markets moving on rather good volumes. On the flip side, you have Trident, that's down close to around 6.5%. So some selling being seen out there. And, EIL, that stock as well is down close to around 2%. Keep in mind, some of these stocks have already seen a big rally, so they're giving back some part of the weight that they put on. Prashant.
Okay, well, that's the market open for you. We're down about, 50 points, 22,458 at this point in time. And it's a softish kind of start. Last few days, of course, the market has bounced. So maybe seeing a little bit of rebound, sort of move on the other side. PSUs, of course, IRFC, BDL, RVNL, this entire list continues to do very well. Look at the pigment makers, Sudarshan Chemicals, 12% higher. I think the stock's gone back to its previous highs. Keynes is another one. They're guiding for 60% growth, 100% increase, 100 basis point increase in margins, 11% move on Keynes after, of course, a fantastic week, which was the last one. Shakti Pumps, of course, stocks now all closer to $3,000. What a move it's seen, Shakti Pumps. Although I must say, market breadth is negative, clear, out and out. Aptus has seen a large block, a very large block actually. Volumes are humongous, 5.5% lower on Aptus. And CG Power, I think, has also seen a block. With the stocks now about 2.5%, 646 or so. CG Power, of course, also has seen a tremendous move. Delivery, numbers disappointed, 7% cut. Delivery, of course, is a kind of a play on e-com. What else? Parag Milk down 10. Medanta, there was a bit of a disappointment. The hospital company, 4% lower on Medanta as well. So that's the market, the long and short of it, the up and down, and we'll come back to some of these individual names in a bit. But Samir Arora is our market master of the day. He's founder and fund manager at Helios Capital. Samir, good morning. Great to have you with us here. Thank you very much for your time. You're back from travels back from extensive travels, if I can say, in UP, the Hindi heartland, meeting politicians. We've been all seeing your Twitter posts with top leaders. sussing out what's really happening on the ground. So tell us the feedback that you've got across through this sort of political yatra, if you can call it that.
And there were many tweets you didn't see because I didn't put them up to avoid trolling from both the sides. But anyway, so the thing is, I went in thinking that we must get some idea in the end phase or last few phases that what is happening. But I came back thinking that it is not as complicated as we make it out to be, which is, oh, will the BJP get 290 seats, 280 seats, 320 seats? I think it doesn't matter. What we need is, at the minimum, will they get 272 seats or not? And I think that is a high probability game. So beyond that is more our intellectual interest in this game. But practically speaking, although that day people may be disappointed, not disappointed, but I finally am thinking that I am only interested in that number. And the probability of getting that number is very high or higher than that. Many people concluded, because this was a big group, that will be same as last time. Some said higher, lower. It's too complicated. They were more episodes and gossip that we got rather than being able to say by going to 2-3 places like Raebareli, Amethi, Lucknow and Ayodhya that you can get a full picture of what will happen nationally. But in the end, I concluded from all this that that is a wrong number to target. I mean, in terms of thinking that what will it be? Because beyond maybe a few days here or there, as long as the BJP government is back, the market will be okay. It might be a little less okay, a little more okay. That depends on the exact numbers.
Okay, so basically you came back with more confidence that, I mean, there's no risk to 272, right? And
I think that's the way. Because it looked that there are people who are against and people who are for, but at the end of the day, the starting point is too much in favor of BJP. The last time's victory was too emphatic, and therefore the share and all the things which all these guys presented. Even if you lose a few, I'm not saying that you again, because you can't figure this out in meeting a few people. And then I saw this interview of Prashant Kishore yesterday, where one point stuck with me, that if some 38 or I don't know, remember, some 40% people voted for BJP, then if you meet 100 people on the road, anyway, 60 people are not basically people who didn't vote. But it will look to you that I met so many people and they were all, or not all, that this X% was against. So the point is, after looking at, even at the visit itself, I had figured this out. And then I think this interview was quite convincing that I don't need to look at whether you're getting 310 or 320. I will be reasonably similarly bullish if you are at 272 plus. That's
No, got that. And that interview was very, very instructive. So for our viewers as well, they should go and check it out. So kind of goes region by region, west and north and east and south. And it's a pretty good one. Samir, in terms of policy cues, because you met some very senior leaders as well, right? In terms of going forward, and you heard confidence that, well, there's no risk to that outcome of them coming back. But in terms of policy cues, etc., anything you picked up?
In the policy, all these senior guys, basically, they don't make the policy, I think. So their only thing was that is the decision of the new government. But basically, looking at everything else, it looked at the policies will not be bad for the market. There's only one angle where I have this worry that if you win strongly, will you be very confident and therefore say that, oh, they're showing some photos of us and others. But anyway, so that, you'll be very worried about, we would be very worried about capital gain taxes and stuff like that. And I can say it that you may get as many seats, but if that is done, it will neutralize a very large part of the good feel factor, and it will be negative for the public because the new investors coming in have seen wealth creation for the first time. And it will be very negative. It won't be just negative, it will be highly negative, because when we say that the Indian market has outperformed other markets over the last 5 years, 10 years, that would not be the case if we put taxes in it. We just show you in the world the index level performance. But since no other market, and I would like to emphasize no, as in 0 out of, I think, 190 countries charges tax to, for example, foreign investors, actually, if you do post-tax returns, then India will not stand out. And many of the biggest investors in the world, but even if they're coming from US, where there might be home taxes, are endowments and sovereign funds and these Temasek and Canadian Pension Fund and RDR. None of these guys pay taxes anywhere. So therefore, if tax is charged at the source, then they will have to look at post-tax returns, and those will be okay, but they will not be as great as the current returns. And also the domestic investors who have recently come in and are creating wealth and are excited about this thing and are therefore supporters of liberalization and opening up because they see its impact on the market. So from both angles, let's hope they don't do that. Other than that, we are bullish, bullish, bullish.
Okay, bullish, bullish, bullish. Got that. Sameer, hi, good morning. So, post the elections, of course, elections is one event and it has its own, repercussions on the market, I think very briefly, right, for those 1 or 2 days. Then the market moves on to looking at, say, the budget, which is coming up in July. Then you have global events as well.
I disagree with that. I disagree with that. If it is the same government, it will have a marginal effect. If it's a different government, because people will take time to adjust. They also have not clarified in black and white what the policies are and what the view towards corporate sector, towards taxes. So all those things are not there in black and white, according to me. Maybe there was some manifesto which I have ignored. But broadly speaking, this is not that simple that it will be a one-day effect if it is indeed a non-BJP government.
Okay, got that. So it could be a binary event if it's a non-BJP
Up to that, yeah. And after that, you may say from next day afternoon, you are again bullish, because now we are saying that over the next 12, 18 months, we'll recover these losses. So when you look at it over 10 years, all these events look like small points. Just
very
like
small blips. Yeah, I completely agree. No, my point is...
Even wars look like small point. But on the day one of the war, it is a war. So you can't say, don't matter after 30 years, when you look at this graph, it will look like a straight line up or something.
No, my point is for that retail investors watching you right now, does he have to tweak his strategy in any way? I mean, or does he just continue believing that this is an uptrending market with a few hiccups on the way? I mean, what's the best way to approach it now?
What I've understood and what I tell people is, because many people will be for one party, many people will be for the other party. And I think the need to distinguish is what in their mind should happen from what will happen. And I saw even in 2014 that many people were betting on what should happen and not what will happen. And I think this difference needs to be there. This is not an emotional thing. It is a practical thing. That's why I say practically, if you believe like me that, there is enough buffer so that even if things go a little bit wrong for the BJP, they are getting more than 270 with 30, 40 seats is a lot, even if you, are doing badly. And so in the end, then it won't matter. It's your belief. But at the end of the day, differentiate between what you think should happen in terms of who should win versus what will happen.
Okay, hi Sameer, good morning. So I think we've gone on for a goodish bit on politics. The message is clear. BJP getting a clear majority will be read favorably, and no tinkering of these capital gains taxes. That's
very much. I am the proponent of this no increase in capital gains, which I think should be brought up again and again.
Okay, so that's out of the way. Let's talk about a couple of sectors and themes. Since we look at your Twitter feed quite a lot. Auto stocks, you had put out a tweet that there are quite a couple of reasons why maybe you'll be a little bit skittish on the auto themes. Tell us more about that. How do you approach this space?
That is
done very, very well.
When it is big picture, I don't worry about small picture. Like in 22, I said it doesn't matter what the companies say. IT sector is going through a bad time, and because what happened, just to give you a setting, a company has some orders in IT. If they know that their client is otherwise going bankrupt because its client or that industry is doing badly, they'll say, no, we have got an order. So what can we do? We have an order. So they knew what was happening, because if I knew without having met any client and they didn't know, it can't be. It's just that they say, we have visibility of an order, sorry. So it's the same thing in auto. It's conceptually a capital destroyer of the highest proportion. I don't think there's been a bigger capital destroying business created in the world in the current context, where you are, for non-economic reasons, making the entire auto industry of the world move to electric vehicles because of climate and ESG issues not related to economics. Because when you switch the number of cars that you will sell will be the same as you were selling before. Of course, there'll be normal growth of the underlying industry wherever in India, maybe more or whatever, but that was happening anyway. So you are spending these billions of dollars to stay in place collectively. Secondly, there are new guys who've come in, and these new guys were not there in the IC business, but they are in the EV business. And therefore, now you have many more players. Now, in a business where you're going to protect and say, oh, I can't handle a Chinese company, I can't handle this company, that company's multiple cannot be the same as a company which is open world, because you are not allowed to imagine that for the rest of my life, our sector will be protected. So you are in theory protected for 1 year, 2 years, 3 years. And after that, this protection has to go away. So whenever the government of India or say in the US, they increase tariffs, you are not supposed to, in theory, because these days we've forgotten theory because of the new crowd, that you are not supposed to give it the same multiple as an unprotected industry, because an unprotected industry is more sustainable. So the number of players has increased. The old players have to make massive investments. The scale of investments in India, these big companies spend $3 billion a year. If you type, you can type EV budget of Volkswagen, EV budget of BMW, EV budget of Chrysler, and you can see that they are in like up to 200 billion. And we are supposed to only say, no, we'll be protected. That cannot be a model in which anybody will make money. But if it does well, there's another formula we have that many companies do well. So we don't care about every company that does well.
No, point taken. Samir, just to...
And also there has been a corporate governance issue in the biggest company. But because I'm interested in that stock, I can't talk about it. But you can't do this conversion of non-voting share at discount. That was not the deal when these shares were issued. But anyway, I'm interested in the stock. Let me disclose.
You talk
Okay, yes.
Motors. Yeah, no,
I didn't say anything like that. You are
fine, you didn't say anything. Just one, Samir, what you said, and take that point about, I mean, if it does well, you don't have to own everything that does well, right? I mean, you can own things which do well, and that's fine.
Every year, some 150, 200 stocks beat the market by more than 10, 15% in that 1 year. We are buying only 35 stocks. Let us say we think that a stock should do badly, but it does well. So how does it matter? It is more important if I think that a stock will do well and that does badly.
Yeah. Yeah,
So many stocks do well, you can ignore half of them and still be okay.
Obviously.
Maybe you will not get all of them to be doing well, but you are hoping from your side that you get enough of those which do well.
No, you kept coming back once or twice or thrice actually on this capital gains bit, Samir. You obviously you consider it to be a very serious issue if it does sort of come through.
It is very serious because there is a point.
I'm asking you, are you picking up something? I mean, are you sussing that? I mean, there's no way to know, frankly, but I mean...
No, I'm not picking up, but in all the discussion which... I don't go and meet government guys since I don't go to... That's a different style of different people. But all these strategist type guys of brokers who go and meet PMO's office or Secretary Finance or I don't know, whoever they meet in the government, they all say that this stock was there. And I tell them that it is your job to...
Oops, okay. I think there's some issue with that video, so we'll try and get back to Samir in a bit. But for now, I just wanted to mention for the market, right? We have the mid-cap index is actually down about 120 odd points. So it's not anything alarming, but it's just that the market is taking a turn for the worse at the moment. And a couple of stocks, Data Patterns is down about 4%, BEML is down 1.5%, Titagar is coming in for some profit taking. It's a little bit of red on the screen is what we're seeing.
All right, I think the line snapped with Samir, but we thank Samir for joining in and giving us his view on the markets and front foot forward as always. Well, let's focus on another corporate, Sobha. The company has clocked its best ever pre-sales in FY24 and highest ever collections as well. Mr. Jagadish, the MD of Sobha, joins us to discuss more on the past quarter's numbers as well as the way ahead. Hi, sir. Morning and thanks a lot for joining in. Well, FY24 was aided by strong launches of around 7 million square feet odd. What is the pipeline for the coming fiscal FY25 and how much of it would be in Bengaluru and other geographies?
Thank you, Nigel. We are very happy to state that we have delivered about 7 million square feet last year, highest ever we have done. And going forward, also, we have very robust pipeline of launches. That's about 9 million square feet minimum is what we expect to do in about 10 to 11 projects across Bangalore, Gurgaon, Tamil Nadu, and Kerala. These majority of the launches, about 50%, 50 to 60% of these launches are in Bangalore, remaining spread between Gurgaon and Tamil Nadu and Kerala.
Okay. Can you tell us, okay, 50% you said is in Bangalore and the rest are spread across other geographies. Got it. In terms of land acquisitions or buys, what is the expectation? Your land-related payments were up almost 3.5 times quarter on quarter at about 210 crores. Will there be more spends in terms of land buys? If yes, what is the strategy that you're looking at?
Yes, if you see our overall strategy in terms of managing cash flow and investment in future, for the last 14 quarters, we have reduced our debt by about close to 1,800 crores in cumulative. And particularly in the last few quarters, we have started seeing that there is enough cash flow for us to invest in future. We had a net debt target of 0.5, which we achieved. And from here on, we think that we will have enough cash flow to invest in new opportunities across geographies. Last year we did about net investments of over 450 crores, and that we think that we should be able to do in the future years as well.
Okay, and your current debt is at about 1,260 crores. So going forward, do you have any debt target? I mean, where do you think you can end the year with in FY25 and 26? Can you bring it down further?
Yeah, like I said, directionally, the debt would be going towards a lower number. But as we have become comfortable from a net debt to equity plan, the focus would be more on increasing our spends towards construction for faster completions and towards increasing our allocation towards new opportunities.
Jagdish, hi, good morning. Prashant here. Good to see you and hope we get this opportunity to speak with you more regularly, not just around results. But, just a word on margins, Jagdish, if you can. Because, from 11%, 10% to 8 point something now, what's the outlook? What's the trajectory going to look like through FY25 and beyond?
Fortunately, yes, the margins have come a little bit lower in the past year. Typically, the revenue and the margins in real estate gives a far view of the rear view mirror. The operating cash flow gives the current view, and the remaining revenue to be recognized gives the front view. And in our case, we have about 13,500 crores to be recognized from the past sales that we have done. Those we think that we will be able to achieve far higher margins between 25 to 30% at a project level. And as we complete these projects and start recognizing those, our margins should definitely improve.
So go back to at least double digit?
From a PAT point of view, from where we are, we should move
EBITDA,
at least.
From an EBITDA point of view?
Yes, EBITDA point of view, again, we were earlier at about 20%. Now we are down to about 12.5%. We should go. We should move towards that in the next few years.
Eventually.
Yes.
Okay, we will let you go on that note. Thank you so much for joining us. That is Sobha talking about their business, but the stock is under a lot of pressure actually. Down almost about 6% right now, so underperforming the market as we speak. Could also just be about profit taking because these are stocks that have done well in the last month or so. But let's now talk about Bandhan Bank. Their Q4 was impacted by elevated provisions. Their slippages also surged, but the asset quality improved. Chandrasekhar Ghosh, the MD and CEO of Bandhan Bank, joins us now to talk more, of course, about the business and the way forward. Mr. Ghosh, good morning. I'll come to the business in a bit, but before that, I need to understand why you chose to step down so immediately from the bank itself, from the position that you hold. And also, was there no intention at all to take up any kind of non-executive role in the bank?
Thank you. I have been taken a very consciously decided to retirement of the 9th of July 2024, which is my third term as a MD and CEO. I have the plan on that. The bank is under the holding company, I like to go to this role of holding company as a strategic role and the bigger way to other vertical also.
Okay, all right. So, sir, a couple of other important points that we want to ask, and you just want to clear the air for the street. Is there an employee training program that's currently underway at Bandhan Bank? If you could give us a rough idea about the annual cost.
This is, you see, that from beginning of the organization, we are a microcredit organization. We are recruited the fresh people. We trained in our own campus, and accordingly, we are grown in the business on that. And when we become a bank, now we have the 75,000 employees. Out of that, in the 45,000 employees in a microcredit, and we have a need to continuously training and refreshers. So we have there is a training infrastructure, so that we are providing to them. But I have not in a specific, I have not the recall on that, what is the cost, and it is a part of this operational cost.
Could you clarify on this? Who heads the Bandhan Employee Welfare Trust?
There is a non-banker who are in the trust, and he was retired from the bank, and he is now under the development program, and he is heading on that. There is a couple of people is there.
Mr. Ghosh, just a quick point. Why didn't you sort of take up a non-executive role? I mean, just to kind of sort of press on that point, because we've seen other similar kind of thing happening at other banks as well, but people sort of staying on or trying to stay on in a non-executive role. Could you give us a sense?
I have not yet a plan on that. Clearly. So that I have the different views on this. The holding company is a very different structure in the banking act of the 2013, which have been given to us. So under that holding company, some other vertical also have been developed, which is different from the other private bank. So in that sense, I feel that I have the good enough time has given 23 years to build up this bank from as a microcredit organization. I have need now to bigger role play as a strategy. Other vertical also I can be contribute on that.
Okay, I think the issue or the concern, Mr. Ghosh, is that you've been at the helm of the bank for a little over 9 years. The general tenure is about 15 years, so you didn't choose to wait for that. Neither did you choose to wait for the RBI, giving comments on your extension. So that was the fear that shareholders had about what really went wrong and how you perhaps distanced yourself from the bank at a time when it maybe needed you the most. Any comments on that?
No, there is no that such of the comments. I feel that the entrepreneur can be developed the institution, and when the institution will be like to very good way to establish everything, then entrepreneur has a need to hand over to the professional management, and he will be take the role of the strategy. For that reason, it is a cause on that, what I feel that.
Okay. I have to ask you, there are some concerns that a lot of the money from the bank was used for commercial interests of the promoter and the promoter's family. Would you want to allay any of those concerns?
No, not any money is related to any of the related family or the promoter. Of course, there is a big promoter group. And of course, this is an other vertical. You already know that it has been developed. But other than this, is not in anything have been done any of the way on that. Very transparent way, very strong governance practice, and we are running this organization.
So you're clarifying that there was no money that was used from the bank by the promoter for buying any property or any other commercial interest. Are you clarifying that to us?
Yes.
Okay. All right, Mr. Ghosh, just clarify one more thing. On this Bandhan Employee Welfare Trust, it's not headed by your son?
No, he's not the
It's
part of. He's not the employee of the Bandhan Bank. He's not the employee of the Bandhan.
Right, but he's taking care of this welfare trust, right? The employee welfare trust. And if you could clarify, Bandhan Bank, does it pay any money? I mean, if he's not part of the bank, does he get any salary by way of this?
If it is not in a employee, how it can be get the salary?
So he's not involved in Bandhan Employee Welfare Trust, right?
He is not involved in the Bandhan Bank. He is not involved in the Bandhan Group. He is not involved in the Bandhan Employee Trust. He is not in.
Got it. Okay. We need to clear the air, sir, for our viewers on all these fronts. So we just said, we'll push a couple of these queries to you. Could you tell us, about any communication you have received from the RBI with regard to your replacement? Because you're leaving the bank without any names going to the RBI for approval to replace you. Tell us more about this.
No, if you see that every bank have the normal procedure. Accordingly, our board have been set up a search committee, and after that they are appointed in a there is a headhunter company, and this headhunter company is going to search, and it is doing independently by this search committee. Accordingly, it is a going process in a well on that.
Okay. All right. Do you want to leave us with some indication of what the sustainable growth could be like for the bank? Now that you've moved out, there is no certainty on who's going to be at the helm anytime soon. All of this news flow has come as a surprise to shareholders. Going forward, can you give us some estimates of what the growth, what the balance sheet, the P&L could look like for the bank?
If you see that the bank started is in 9 years before, with a book size of the 9,500 crores. So after this, the nearly 9 years, bank book has come 2,60,000 crores, advance and the deposit. Out of that, 1,35,000 crores is the deposit. In this financial year, we are grown is a 25% deposit, which is the 37.1% CASA and nearly 70% is a retail. So we'll be like to grow in this line of the deposit growth. And this is the one part. Second part is an advance part. Yes, if we not count our write-off, advance growth has come 18%. I feel that we can be like to future continue in the 18% year-on-year growth of the advances.
Okay, Mr. Ghosh, since we're clearing out a lot of queries today, final question, any possibility that Bandhan Bank could be looking at some inorganic growth, either being acquired?
We have not any plan up now.
Pleasure talking to you, Mr. Ghosh. Thanks a lot for taking all our queries and clearing out a whole host of issues for our viewers as well as your investors. Well, for the time being, we'll slip into a short break. On the other side, we'll be joined by the management of Data Patterns. Stay with us.
Welcome back. We got the market, which is down about 30 points. So it's a very, very quiet kind of a day if you look at the indices. But if you look at specific stocks, there is a lot of action. Defense and PSUs are doing very well. BEL, Bharat Dynamics are two names which come right on the top of the list with volumes. But there is also RVNL, IRCON, and so many others which are doing phenomenally good. I'll go down the list of stocks, but this is essentially what's coming up right on the top. Data Patterns reported numbers, and I'll just quickly summarize the full year numbers. So revenues are up 15%, EBITDA is up some 30%, and profits went up about 47%. These are full year FY24 numbers. We have the management now with us for Data Patterns to talk about what FY25 may look like. Mr. Srinivasa Gopalan Rangarajan, Chairman and Managing Director at Data Patterns, is now joining in. Good morning, sir. Great to have you with us here. Thanks very much for your time. Prashant this side. Can we start by asking you what happened in 24? Because the guidance was for a 25% top line growth. You've done 15%. What can we expect for FY25 on top line and on margins as well, sir? I think you'll have to unmute yourself. Go on, sir.
Am I audible now?
Yes, clearly.
Okay. Good morning. Thank you for having me here. Yes, answering your question. Last year, the guidance was around 20%. We could not ship a couple of projects, which is ready for shipment, but we couldn't ship it due to, inspection delays. But the product will be shipped probably this quarter. This year, guidance about 20-25% in top line growth, and retain about 30% bottom line growth, which is what we've achieved in the last so many years.
Has it already got this shipment that you're talking about? Was it just an operational delay? Was there any? Could you just go into the details a little bit?
No, we have a couple of shipments which is ready for shipment, but inspections got delayed. The inspection is about to start now, so hopefully the inspection starts this quarter. We will be shipping it. But the products were ready last year for shipment, and this is part of original plan. So there was a small dip in revenue, but that has been compensated because last year to this year our margin percentages are much better than last year. See, this has been contract to contract. So you see that last year to this year our EBITDA margins have gone up from 37%, 38% to 42%. So we had a slightly more profitable kind of contracts negotiated this year. So we're okay on the bottom line as per the predictions.
Mr. Rangarajan, can you help us with over the next couple of years, what is the proportion of orders that you're expecting from defense versus from space? Where do you see the largest amount of opportunity now? And will the dependence of DRDO reduce over the next couple of years?
Okay, see, largely the growth is going to be in defense, not so much from space. The space is actually a smaller player compared to defense in this overall gamut of market space here. So the larger play will come with defense. We expect this year about 1,000 crores plus on terms of new orders. This is all based on single tender contracts, which we've already earlier quoted. A repeat order is coming, or some other contracts which we're going to get this year. We're not including the tendered market. We don't know which way it will go. We're talking about some more estimates. Only thing, there may be some delays up and down in the kind of contracts which we're going to get. But the estimate is about 1,000 crores plus we should get this year. Regarding the other point,
I just had a follow-up. You said 4,000 crores of new orders from defense is what you are hoping to receive, or you've already got?
I didn't say 4,000, I said 1,000 crores plus.
Oh, 1,000 crores. Okay, sorry, I heard 4,000 crores. I was wondering. Okay, 1,000 crores of new orders from defense is what you're looking to get, right?
Yeah, and gradually the market size will grow in the MOD business. And as you grow up the hierarchy in terms of full systems, the DRDO business will slowly come down as a percentage. If we continue to grow at the percentage we are growing now. Today DRDO is a significant portion of our company. We expect it to continue for more time to come. But the growth will happen over the next few years, next 5 years. It will come from direct MOD business.
Okay, all right. Hi, good morning, Mr. Rangarajan. So, 1,000 crores of order inflows is what you're looking at as you're de-risking yourself from DRDO business. Got that. Just to reconfirm the numbers for the current year, revenue growth of 20 to 25%, margins of 40%, and PAT margins of around 30%. Did we get those numbers correct?
That is what we're expecting to do this year.
Got it. Super. What about the exports business? That was relatively smaller, but you were talking about it going to double digit, I think so. So in the past year, how much did exports contribute, and where is that number headed? And I think the cash conversion for you is around 300 days, right? It holds around those levels?
Yeah, the export business is about 6% last year, I think. We have contracts of about 60 odd crores, maybe about 80 odd crores. Again, contracts on hand for export. We expect to complete those exports this year. And some more export orders are expected as we go along. But this is not going to be a significant growth model today. The growth is going to be in building full systems for MOD. And once the systems are built, we plan to export those outside India. So that is how the growth is going to happen. Though we are in discussion many foreign multinationals, but that is to come to a large size business is going to take a few more years. Yes, we are trying to increase that business over the next 3 to 5 years, but that is not going to be an immediate revenue potential. So this is where it is. The second question I forgot. What did you ask?
No, the cash conversion days, sir.
Yeah, we expect the cash conversion days to come down from 300 odd days. It's come down as you go along. More and more production business which you do, the cash conversion cycles will come down. Today, we are largely dependent on development orders. That is why the conversion cycles are slightly longer. But as you go along in the next 2 to 3 years' time, the working capital days, the net working capital days will come down. Though we are stocking a lot more than earlier because of large order book we have, and we've stocked material for this year as well as next year deliveries. So the inventory levels have gone up somewhat, but this will be brought down as we go along.
Okay, 2 quick questions. One on the radar business. How is it doing right now? Radar and electronic warfare both. What kind of potential do you see there? And also, are you looking to invest more in the satellites business? What is the addressable market like over there?
The two key areas for data patterns is radar and electronic warfare. We almost do everything in electronic warfare with DRDO. Now we have spent more than 15-16 years in development of full systems in EW. Similarly, in radar, now we are building our own radars. We satisfactorily executed the 9 radars orders we got from Air Force and Navy on the open tender. We received this in 2020. We have delivered the full radar set. 9 radars have been delivered to Air Force and Navy. Similar to that, we are now participating in other Make-2 programs, as well as ab initio development we have started because we raised money in the market last year to do product development. We have started development for fire control radars, EW systems and suites, communication equipment. All this product development is initiated. The moment the products are come to, starts getting into trials, we expect some contracts to kick in. This is all, we are spending a lot of development money now to build future business. We expect the next 2 to 3 years we'll start getting the large businesses as we want to go because the market size is very, very large. And unless we have products, we cannot increase our total addressable market. So instead of going and collaborating with the foreign companies, we're thinking of building it on our own. So with the result, we've raised the money from market. We're spending the money now building products. I think you will see the change in the next 3 to 5 years. The large order book will change based on that.
So when you say you're spending a lot of development money, what exactly is the capex over the next couple of years that you've outlined? And will it all be pulled in from the market? Will there be any debt that you would be looking to raise?
We raised about 500 crores in QAB last March. That's in 23 March. So this is essentially towards product development. Our existing cash on hand in the bank with investments, etc., is about 750 crores today. So we are fairly comfortable in cash. We will not necessarily to go in for cash now. We have used this cash to develop our own products for radars, EW, radios, etc., where there's a huge potential, upside potential available in the market today. So the idea is to build the products, take it to market, go through field trials, and see that we get the business. This is the idea with which we're doing the product development. And the capex itself, we've already built one more factory which is operational. We have additional land about nearly 5 acres with us. So we are going to build some more facility infrastructure so that when the orders start coming in, we are in a position to execute the contracts. So capex is maybe about 150 crores we'll spend over the next 2 years on top of development money, which will spend probably another 150 crores on product development we'll be doing. On the other part, on satellite, we're not very sure how the market size is going to go and the opportunity is going to come. So we are a bit cautious about that, building satellite and putting money inside. So we have full capability to build satellites. We are now holding back a bit. We'll have to see where the opportunities come. Then we'll start designing our own satellites.
Okay, all the best. Thank you for being with us on the channel. And speaking about the business, a revenue growth of 20 to 25% is what Data Patterns is expecting in FY25. Let's take a quick break. On the other side, we'll connect with the management of Vinati Organics to discuss their Q4 earnings. Stay with us.
Welcome back. Well, as promised, let's get chatting with the management of Vinati Organics. Ms. Vinati Saraf Mutreja, the MD of the company, joins us on the show. Hi, good morning, and thanks a lot for joining in. Well, you speak about ATBS demand coming back, in FY24 after a lull that we saw in FY23. Now, with the new ATBS plant being commissioned in the second half of this fiscal, what can the contribution from ADBS come in at? And what does it take your total capacity to as well?
Sure. See, ADBS, did very well in calendar year 22. And that's why in the beginning of 23, most of our customers felt that they were sitting on a lot of inventory, and hence 23 was a slow year for ADBS in particular. But we saw a lot of destocking happening, and finally at some point towards the end of the year, they did normalize inventory levels or run out of inventory. And so we're seeing good pickup in demand starting this calendar year, which will of course run into FY25. The new capacity for ADBS will be ready end of this year. We don't expect much revenue coming from the new line in this financial year. This will increase the capacity by 20,000 tons per annum.
Okay, but in ADBS, you'll be looking at least at a double-digit growth, Vinati?
Yeah, absolutely. I mean, we are looking at about 30%, 35% growth in just ADBS itself.
Oh, okay.
Okay, that's big. What about the overall growth? Has demand come back across all segments? And will FY25 growth largely be led by volume or by pricing? What's the outlook?
Well, the growth is definitely coming back through volume. We see good demand pickup across segments and across products besides ADBS as well. Butyl phenols is doing quite well. Even antioxidants, the demand is slowly improving and we are gaining more market share. Our other products, IBB, isobutylene, as well as some niche products, they remain stable.
Okay. Okay. So you're saying the growth will largely be led by volume. So what will the overall growth look like in FY25? What are you targeting? Vinti, can you hear me? Yeah, we can hear you now. Yes, yeah. My question was, I think we lost you at the volume part. So for overall, for FY25, what kind of volume growth are you looking at?
Overall, we're expecting about 20 to 25% volume/revenue growth.
20 to 25% volume and revenue growth, right? You were talking about butyl phenol and antioxidants. We understand that the potential revenues from this is around 1,000 crores. But does it get impacted because of the competition that you're seeing from China?
Well, see, butyl phenols and PTBP, which is our main revenue generator, because half of the butyl phenols are used in captive consumption for antioxidants. We managed to get an anti-dumping duty imposed, but the main competition is Korea and Singapore. In antioxidants, yes, we do see competition from China, and that has reduced the price levels, and so the revenue potential if at present prices has slightly come down by maybe 10% in antioxidants itself, but we do expect as the demand recovers, as the volume recovers, we expect this depression in price to recover as well, because these are unsustainable levels.
Okay, just a couple of more queries on the same point. On butyl phenol, last year you did around 300 crores, right? For this year, what should that number look like?
It won't be very different just on butyl phenols, maybe about 350, 400 crores, because the excess capacity utilization is going to go in the captive consumption. So not much in the sales, external sales.
Okay, and antioxidant, it was around, I think, 130 crores. So that goes to what this year?
That should double. So maybe you can expect another 150 odd crores from AO. So total growth of about 200 crores from the combined segment.
Got it. Vinati, hi, morning. So you've been saying that the growth is going to be volume-led on ATBS. Just a quick point, is there any risk of sort of pricing coming under pressure even as you ramp up volumes? You're expanding capacity in ATBS as well. I was reading a note which said that there is a company called, and you know this better, Advantic Fine Chem, which is also ramping up capacity. And the risk is that they sort of come up with all this additional capacity at the same time that you scale up as well, you ramp up as well. Is that possible that perhaps there could be pricing pressure?
See, well, as far as I know, Advantic started their plant about a year back. And I also know that we haven't lost any market share in the industry, because I can tell from the exports and the data. We also have contracts in place with most of our customers, not just volume contracts, but also formula-based pricing, which means that my price changes based on input prices. I don't expect this scenario to change much in the coming year as well.
So revenue growth in ATPS between 30 and 35%, as you said.
That's
in
right.
FY25. Okay.
Yeah.
And you have visibility for beyond that as well, for a strong kind of growth?
Well, I expect, this product in general grows about 15% on average a year. And so, the new line is being commissioned, keeping in mind the next 3 to 5 years.
Okay. Can you tell us over the next couple of years, or at least in FY25, what is the capex plan that you have, and how much are you willing to put in capex, and how are you planning to fund it?
Sure. So the capex plan for this financial year is about 500 crores. It will be mainly towards the ATBS expansion as well as the new products that we are adding in Vinati Organics, the 100% subsidiary, and it will be completely funded through internal accruals.
Okay, through internal accruals. Got it. Vinati, thanks a lot for joining in and speaking to us as always. Have a great week. That's Vinati Organics. With the growth that they see in the business, they are expecting a volume-led growth actually, and they're seeing good demand across most segments. But let's shift focus to the commodity markets. What's the one commodity that you should be looking at today? Manisha Gupta is here to tell us more about that. Manisha, back to you.
Thank you so much for that, Sonia. Well, I'll start with the gold and silver prices because we've seen all-time highs come in for this one. I mean, Friday was a phenomenal day. It has been a long weekend for us, but yesterday in the New York session itself, we've seen prices run up further. And Monday morning, as Asia comes back, we are looking at an all-time highs yet again of $2,440 an ounce on the screens there. Gold actually has hit an all-time highs, not just in US or the India markets there, but many of the European countries, in Australia, in China as well, where we are looking at gold prices trading in a premium. Well, there is optimism that Fed will cut rates in the month of September. All the data that has come in on the previous week from the US has been on the weaker side. The dollar index has been slipping as well, and that in turn has given support to the prices. And then it's all about geopolitics. The Iranian president's death in helicopter crash has created uncertainty in the Western Asia, and Iran is just one part of it. We have been hearing, statements coming in from Israel as well. There also have been reports on how the Crown Prince in Saudi Arabia has cancelled visit to Japan, and this is after Saudi King Salman's health remains a concern. So within Middle East, there's a lot of shift in power. There's a lot of tensions coming in, uncertainty as well when you look at the politics sides there, and that is really has led to buying come in for various tangible commodities, including gold and silver as well. And then you're also looking at Fed official speeches in this week. Well, that is going to be quite key to watch. It's not just gold. When you look at the silver prices, well, we are trading quite on the firmer note here as well. In the last 1 week itself, we've seen silver prices gain up by 7.5%. In the Indian markets, we are trading at an all-time highs and not too far away from that lakh rupees a kg mark as well. For the international markets, we are holding around $32 an ounce right now. This is the highest price since December 2012. And in this year until now, we have seen the silver prices gain up by 33%. Apart from the geopolitics and the rub-off effect from the gold itself, it also has to do with the industrial demand that the silver is looking at. Well, this is going to be a fourth straight year of deficit in the international markets when it comes to silver. The demand for solar panels is expected to be at record highs. The overall industrial demand for silver this year is expected to be a fourth year of record highs, and that is where silver seems to be taking all its support from. The markets do believe that it is slightly overstretched on charts right now, but nobody is selling. It still is a buy call for gold and silver, both of these precious metals.
Okay, a buy call for gold and silver. Silver ETFs, right? I mean, if you look at the numbers, there are, I think, 8 ETFs now that are offered by various fund houses, and that's crossed the 5,000 crore mark in the month of April, as per data from the AMFI. So silver ETFs are picking up in a big way. Thanks a lot, Manisha, for that. Well, let's talk about BEL, the big mover today. Vivek is here to give us more details on that. Vivek, over to you.
Well, good morning. Like we highlighted in the morning, it was a very strong set of numbers from BEL. Q4 surpassed analyst expectations across all of the key metrics. Also keep in mind, BEL is a likely inclusion as far as the Nifty is concerned when the next Nifty semi-annual index review occurs. Now, looking at, the numbers themselves, when you're talking about the revenues higher by 32%, much above what the street was anticipating, profitability higher by 31%. Order inflow, beat very handsomely what the company had earlier guided for. The company earlier had guided for an order inflow of close to 20,000 crore. The FY24 order inflow came in at 35,000 crore. And right now, the company stands on a very strong order book of over 75,000 crore. Now, brokerages, as expected, are very enthused. Jefferies continues to have a buy rating. They've gone ahead and raised the target price to 305 rupees a share. They're saying that the fourth quarter EBITDA was 30% above what they're anticipating. They're saying that the company benefits a lot from the spends across Army, Navy, as well as the Air Force. Now, what they're saying is that the margin strength that the company displayed in fourth quarter gives confidence on profitability sustaining even from these levels. Now, talking about Nomura, Nomura also has a buy rating. They're saying that earnings beat was largely led by very strong margins that came across. They're saying that the implied order inflows for Q4 was almost 8,200 crore, which was almost 4% above what Nomura was anticipating. And lastly, Morgan Stanley, again, they have an overweight rating over here. They've also raised the target price. They're saying that the FY24 margin of 24.9% was significantly above 21 to 23% margin band that the company was giving. So overall, very strong set of numbers. Brokerage upgrades have come in, and the likely inclusion into the Nifty 50 is something that's keeping the stock very active.
All right, thanks a lot for that. Well, let's also talk about Balkrishna Industries. The stock is up 6% right now. The numbers were good, actually. There were no problems with the numbers. But brokerages are a bit mixed. So let me just take you through some of the brokerage notes. Kotak has a sell with a target price of 2175. Motilal Oswal has a neutral with a target of 2535. Citi has a sell with a target of 2300. The only optimistic one is Nomura. They have actually upgraded the stock to a buy with a target price of 3230. Now, the reasons for a bit of caution is that the company did not give any guidance for FY25. In fact, in their conference call, they said that it's too early to give any guidance because of how the geopolitical scenario is shaping up. They also spoke about how there is some increase in raw material costs, rubber prices, crude prices, and freight rates have also been elevated. So these are some concerns. However, one must remember that the stock is surging because the Q4 numbers were very good. Revenue growth of 15.5%, margins have improved, volume growth of 13%. So that's something that the street liked. But overall, if you look at it, brokerages are a bit mixed on the stock. But Sonal is also with us to talk about Sudarshan Chemical and why you should be watching that one. Sonal, over to you.
Well, thank you so much for that. The company reported numbers on 17th of May, but last night it uploaded the investor presentation, and that is what the street seems to like, the commentary out there. Now, remember, the company reported highest ever income from operations in Q4, and it was majorly contributed by healthy growth in domestic sales. That's what the company is talking about. The operating leverage with YOY volume growth led to the highest ever EBITDA as well. So the export revenues saw a low single-digit growth of around 2%, but domestic revenues saw the growth of around 15%. But quarter-on-quarter growth in exports was strong at 23%. And the company says they are seeing improvement in Europe sales, and there's continuous improvement in North American sales as well. So export as a pie continues to do well for Sudarshan Chemicals. They are monitoring any crude oil price movement and potential impact on any other intermediary prices as well. That'll be important to track according to them. But their cash conversion cycle has reduced to 66 days versus 74 days. Their net debt to equity has improved 0.3 times versus 1 times on a YOY basis. And their domestic market share is estimated to be around 35%. So strong P&L and strong balance sheet as well. The company says they are focusing to shift towards higher share of specialty segment, and they will continue to expand their product portfolio, and they're quite optimistic on future prospects as well.
All right, Sonal, thanks very much for that. So Sudarshan Chemicals seeing a big double-digit move right now. We'll take a break. We are back in just a bit. Gautam Dugar of Motilal Oswal Financial Services will join in on the other side. And we take stock of the earnings so far with the majority, I think, in the bag. How do they look? And what have they done to the full year FY25 earnings estimates? Stay tuned. Welcome back. Let's connect with Gautam Dugar now, Head of Research Institutional Equities at Motilal Oswal Financial Services. Gautam, good morning. Good to have you here. Appreciate your time as always. So, time to take stock of earnings. And what are your full year FY25 numbers moving based off what you've seen for the last quarter?
Hi, Prashant. Good morning. Thanks for having me. So as of yesterday, if you look at the earnings season in totality for the fourth quarter, about 201 companies in our coverage and 41 Nifty companies have declared their results. the numbers have been better than expectations. We had a very modest expectations going into the quarter. So for our set of 201 companies, the earnings growth is about 9% versus expectation of 4%. This is also a drag from OMCs. If you keep aside those 3 OMCs, the rest of the 198 companies that you look at on a YOY basis, the earnings growth is about 14%, which is almost double of what we were expecting, about 7% growth. And for Nifty, the earnings growth is about 13%, which is far better than our expectation of about 5%. As far as forward revisions are concerned, Prashant, the upgrade downgrade ratio, as we call it, for companies which have seen a plus minus 3% or more than 3% kind of a revision, the upgrade downgrade ratio is almost same. 48 companies have seen an upgrade of 3% plus, and about 52 companies have seen a downgrade of more than 3% for FY25. As regards forward EPS estimates, as far as FY24 itself is concerned, we have seen an upgrade of 2%. So when we went into the preview, we had an expectation of about 976 rupees for FY24. As we are about to now close the earnings season for FY24, we are reaching 995. This works out to about 23% earnings growth versus a delivered EPS of about 810 rupees. And for the next 2 years, for Nifty FY25 and FY26, our estimates are stable around 1130 and 1320 rupees, which is a growth of 14% for FY25 and about 16% for FY26. So CAGR of 15% on a base of a 23% delivered growth this year. So net earnings season has been quite stable, and more importantly, the spread of earnings have been fairly strong. I mean, within the sectors that we cover, barring specialty chemicals, all other sectors have either beaten expectations or have met expectations. So both in terms of aggregate performance as well as the spread of the earnings, the season has been pretty solid.
Okay. Gautam, hi, good morning. I wanted to talk about some themes, right, that have worked very well in this earnings season for a while, actually. One of them is this Indian companies manufacturing for the globe. So, for example, we were talking about Dixon Technology, right, and how they've now supplied to some of the largest mobile companies in the world, very good numbers this time. We were also looking at some of the defense companies that are doing very well. BEL, for example, this morning is up 7%. From here on, which are the companies where you think could give you maximum potential based on this theme?
I think, Sonia, some of these themes that you spoke about rightly, they are a multi-year theme. It's not as if they started performing well recently. They've been doing well for the last 2-3 years. And if there is a policy continuity after this election, the results of which are going to be declared 2 weeks from now, then I think there will be far more traction in the same set of themes which have been working, which is industrials, infrastructure, manufacturing, PLI-based themes. So I think the tilt of the market, which shifted post-COVID towards domestic cyclicals and some of the forgotten sectors from 2010 to 20, they've come back roaringly in the last 3-4 years. I think that theme can continue. We can add few more sectors to that, themes like real estate, discretionary, even auto, for example. Auto once again has been the best performing sector in this quarter and has beaten expectation. Spread of the earnings has been fairly strong too. You spoke about Bharat Electronics, a stock that we just upgraded yesterday. Solid set of numbers, earnings upgrade of more than 20%, and the visibility on order book is fairly strong. So, whether it is defense or capital goods or infrastructure, real estate, these are the themes which have been doing well for a fairly long period of time. And we do expect them to continue to do well in the forthcoming few years, assuming there is a policy continuity.
Gautam, let's just assume for a bit that we're at about 22,500, right? Pretty close to the previous all-time high, around 22,800 or so. And we get there in the next 2 weeks, right? And numbers come and there's continuity around the last year's number. What are you expecting a big move? What are you hearing? And just some feedback once that comes. Or you think it'll be business as usual? You think there has to be some readjustment, a one-time kind of 1 day, 2 day thing, or not really?
So Prashant, these are very difficult things to predict, but you go back 2 weeks, when there was some nervousness which was creeping in around, political certainty. But after phase 4 and phase 5, again, there is a sense of calm and stability. And some of the famous psephologists have already sort of given a hint as to what is going to unfold on 4th of June. So market has been having a sigh of relief of late last 4-5 days. If you see the action in small cap index, if you see the action in some of the PSU companies. So I think we are not going into the election with a lot of rally behind in the last one odd month. We're going around in that same 22,000, 22,500 band. Now, depending upon the results, depending upon the outcome and the margin of victory, market will have a few days of reactions. But beyond 2-3 days, if the election is in line with expectation, the outcome is in line with expectation, I think market will then again go back to fundamentals. Then people will start anticipating the big announcements that Prime Minister has promised in his first 100 days of tenure, potential budget-related changes or announcements. As far as fundamentals are concerned, as I said, we have closed the year with a good 22-23% earnings growth, and the projections are 15% CAGR for next 2 years. So today you're trading at about 20 times 1 year forward EPS of 11.28. You assume that 8-9 months later, if you were to traverse a similar journey and trade at 20 times 1 year forward again, that point of time you will be discounting FY26 EPS of 1330. If the 20 PE multiple sustains, mathematically you are talking about a range of 26,000, right? Assuming there are no big changes in the earnings estimate along the way, and we don't get any surprise on 4th of June. So there is a range which is well established for more than 2 years now. Market has been largely, as far as Nifty is concerned, very nicely trading around 20 times 1 year forward.
One more theme that has come back in a big way is the return of rural demand, right? Whether it's most corporates that have an exposure, whether it's Hero MotoCorp, Colgate, Dabur, HUL, all of them spoke about green shoots of recovery in rural demand. To play this theme in FY25, what are the top stocks that you'd look at?
Yeah, so this rural revival is coming back into reckoning and narrative after almost 2.5 years of a rural slowdown. Last year, we've had a very bad monsoon. This year, IMD and Skymet both have projected that the monsoon is going to be normal. On top of that, some of the bellwether companies in consumer and auto, which has a slightly larger, salience of rural, they've spoken about some some early signs of green shoot. So if that transpires, then I think there is a decent room for an upside in some of the heavyweight in consumer and auto sector. Obviously, consumer has been underperforming for more than 2-3 years now. Stocks like Hindustan Lever have been flat for 4.5 years now. From February 20 till today, the price is more or less in the same range. So possibly, if there are some earnings upgrade along the way, that will help. Plus, inflation has been in a control now. Commodity prices have been in range. So all of this put together gives you a decent backdrop for some rally in a consumer sector, which are predominantly rural-facing themes. So there you might expect some sort of a rebound. Auto has done very well. You've already seen M&M, which is part of our model portfolio, hitting a new high after posting a very good set of numbers with a very good sort of a commentary for next year. So I think some of the stocks have already rallied, but given that they're coming on a 4 years of underperformance, it will not be far-fetched to expect that there can be some more rally in those names. And do remember that last 3-4 years has all been about domestic cyclicals and capex side of the cycle, wherein consumer stocks got left behind, especially staples, because discretionary has done well, which is where we still have a big overweight compared to staples. We are still underweight on staples. But yeah, I mean, tactically over the next 6 months, if monsoon, which is about to arrive in next 2 weeks, if it is normal, then possibly you will see a good sort of a rebound in some of these names.
All right, Gautam, we'll leave it there. Thank you very much and good conversation as always. So, FY24 earnings, Nifty earnings have moved up a little bit. 25 earnings, you're pegging at 1130 and 1320 for FY26. So, decent sort of earnings growth estimates for the next 2 years lined up as well. So, that's Gautam Dugar of Motilal Oswal Financial Services. Markets, by the way, are down about 20 points. So, it's a very quiet Tuesday as it turns out. Lots of action in terms of specific stocks, and that's going to be the focus here over the next many hours as well. Those are indices. Mid-cap index is flat. The Bank Nifty is down about a quarter, and the small-cap index is also kind of sideways. It's a wrap on this edition of Bazaar. From all of us here, goodbye. Thank you very much for staying with us. Chartbusters will pick up on all the action in just a bit.